Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and here we are on Monday, May 13th, 2024. Hope you had an awesome weekend. We're looking at the Dow Jones right off the top of a key level here on the daily. It's an inversion gap, and it's just come back to the midpoint. So we're looking for this kind of setup to happen around these levels. It's that 50% mark. I'm looking for a little setup to happen in there. Don't forget, we could still continue to push higher. We've gone from like array to like array. So look for the similar things to happen in ES and NQ. S&P, we're looking for a little further pump up. Take out Friday's high. And then NQ, we're looking for on the daily here. Yeah, I'm looking for NQ to take out Friday's high. Those are equal highs here. So we're looking for those to get taken out and then run into the consequent encroachment of that inversion fair value gap. Make sure we are all live here this morning. I'm welcoming all you new folks to the show. We have 713 people. Thank you all for turning up. Thank you all for showing up. Hans, you're the first through the door today, Hans. Welcome, welcome. So I'm still looking for more upside in NASDAQ and ES, even though we have a divergence here. So NQ is, or sorry, the Dow Jones is already met its consequent encroachment already. And these two are on their way. ES is fast approaching. And NQ is still lagging a bit behind. Dixie. So look at Dixie. So we've got further downside on the American dollar. We're going to start digging into this daily fair value gap this week, I think. And that would put upward pressure on all the foreign currencies. So we're looking for continuation through this, take out last week's, 2 weeks ago on Friday's high on the 3rd, and then looking for a fill of that fair value gap above us there. Or block fill. Not very clean price action there right now in the 1 minute. But look for more upside here on the Euro and GBP. I'm looking for a revisit of this daily fair value gap, and then I'm looking to see this get worked right through this week. Aim for this old high here. and take out Friday the 3rd's high as well. You see how it's really lagging behind there, right? This is already into the mean threshold. This doesn't even come close yet. So this one is the sixth sister of the two. We've got our swing point here on the daily. Body breaks this high, returns back into it, continues to the upside. So that's looking good so far. What are we looking for setups? Nothing yet. Wait for 10 o'clock. You're out of here. Love you, baby. Got careful. All right, so we've got a reaction off of this consequent encroachment. I'd like to see that stay open now and this start pushing down, taking out these lows. And the objective is this fill of this fair value gap here, obviously, and a return to the daily fair value gap just down here. Yeah, I'm just looking for these lows to get taken out and then fill of that gap this week. I'd like to see that mean threshold hold price though. We're looking for, I'd like to see a body get below this candle, come back into it, find some support at it, continue down. If we continue to push up a little higher, look for a revisit up here. Going lower. We'll see how that sits on. See how that sits on the 10 o'clock opening. Looking for higher prices in all the foreign currencies. We broke this high here. We did not come back there and revisit this. This was the only opportunity right here. When it broke that high of that fair value gap, returned back into the consequent encroachment of it, and then finally broke out. That was on the 15-minute chart. 1-minute chart we'll put here. I like to see her retrace back to the season or session open here and then continue higher. Like an afternoon revisit of this, then go higher. Lunchtime. Looking for these highs to get taken out now on Australian dollar. Take out this low. Body breaks the high, comes back, revisits, nice entry, continue higher. I want to see this mean threshold get taken now on the upside for, well, it's for Japanese yen. So if this does hold, which is the breaker, you want to see that give way now and us get below this candle. If we do run this high out here on the second, and then start breaking down below here, return back to it, and then continue through. That's kind of like what I'm looking for there. So yeah, you're looking for maybe slightly higher prices. Take this out. Right now we've got support to go higher on the 1 minute. At least back up into here. The 4 or 5 cents or something like that. Oil. We're tracing back to this order block. Now we're looking for I'd like to see this whole price here roll over and come back down. It would have been nice to see that actually stay open, but it didn't. So revisiting this up close candle here. Hour. Clean break above. Body gets above order block that initiates the run down. Comes back into it. Sloppy here right now. Wait till 10 o'clock on that one. Gold. Oh, it looks like it's going higher. Yeah. I'm going to go long on gold. It's right near that entrance. And I'm looking for and thanks. Bitcoin. It's going short on Bitcoin, but it got past here, so I'm going to close that one out. Mean threshold. I think that's going to get taken anyway. I'm going to close it out. It's above my level. It came down below here. It just popped below it. But caught me in that bear trap again. I got to look for these ones when you have that order block next to this reversal. You got to see this breaker here get taken on the downside, come back into it. Otherwise, bear trap again. I'll get caught on that a few more times till I learn that, I'm sure. But until then, let's see what we got going on here for 7:30. Eternal Echoes, hello. Christoph, how are you this morning? Good to see you guys on a Monday. Jonas, Dave, and Shep, good morning. Morning, Michael. Good to see you. That's awesome he's here. Good morning. So this is going to be like a minute by minute thing, Michael, that you're going to see. And we're trying to do our best to follow your principles here. So stick around. If you got any advice, I would much appreciate it. Otherwise, it's going to be minute by minute, blow by blow, trying to stay in price action. That's the whole point of this this channel, is trying to stay on price action minute by minute. So we're going to wait for the 7:30 open. Morning, Tommy, Victor, Chris, good morning. And ICT, yes, we have ICT in here this morning. Stream like I'm not here. Yep, I'm gonna try and follow exactly what I normally do. And you might have to DM me and tell me, give me some advice as to I know some of my candles may not be, but there's some discrepancies over breakers. And anyway, just watch and let me know what you think. I would try to stay on price action as tight as we can. I watch every single candle on a 1 minute chart, and yeah, your advice afterwards would be greatly appreciated. So we're going to pretend like Michael's not here. We're going to just do what we always do every day. All right. So let's go to, so again, we're looking for this like array here, for this discount array, all the way back up into what we've talked about in the past, like Michael talks about this like to like array. So we have our discount array here. When we have this reversal happening, it comes back inside this, and we've got the push up to the higher one back up in here, this reversal. So we've come so far on the daily, we've come all the way back into here. So we're looking for the continuation to the upside, into the taking out Friday's high, and a bigger, deeper run into this daily fair value gap inversion here. So when you see, what we've seen is these little runs below lows. And when you see this kind of pattern where you see that fair value gap on one side, it's broken to the upside, we come back and revisit it, look for the range inside. And if you go from like array to like array, like we have this small imbalance right here, if you're aiming for that just inside a small range, so we try to stay inside these small little ranges that we're in, and look for the PD arrays that sit inside these small ranges. So we break the upside, get long there, stop loss would be sitting down here. Then if you're still doing that method of pulling your fib tool, I know this isn't something that you teach, Michael, but it's as soon as you get to 50%, pull your stop loss to break even. You hit 60, move to 50. That way, if you would get this reversal pattern happening, you're hitting 62%, 70, move to 62. And if it comes back and takes you out there, that's great. If you're aiming from PD array to PD array, you literally wait till you get to this point here and you close out your trade. If you're looking for the liquidity above the market, you're aiming for the higher, and you clear out the liquidity sitting on this buy side. Same kind of principle here. We have this little high. We take that high out with a fair value gap to the downside. Now here's that bear trap they were looking at, where you think as soon as it takes this candle's low out, then you think about as soon as we return back into this, you want to get short from there. Or you take this fair value gap here, you come back up inside it. This is where my rule for the fail-safe breaks, when we have a trade that closes above that, then we don't, I always think you're going to go longer. We retrace back down. We actually take out that low this time here, run back into it. Then you've got a very small range to work in inside this smaller range and not this larger range, you know. We have a fair value gap sitting here. Run to the upside of it, take it out. So here's our swing, kind of like what we're seeing down in here. Body breaks above it. We've come back in, found support. So right now it's providing a level of support. So we'd be bullish now. We're still looking for this higher upside run into the consequent encroachment of this daily inversion. You're still finding support off of here. And then your higher time frame objective on the daily is here. Here's a 5-minute example of the same thing we were talking about here. You have a little small fair value gap here. Body breaks above it here, and we eventually come back to a full fill of potentially 3 entries. So you have that high, the mean threshold, or sorry, the consequent encroachment, or the low of that fair value gap entering in here to go long. Now, if you're in a larger range, which we'll have to just stretch this out here. So right now I'm looking just at this last up close candle here. It's mean threshold at 18,329. Okay, we just hit the mean threshold of that. I want to see it trade through this and continue climbing higher. Take out the rejection block to push for a higher time frame objective that we're looking for on the daily. So far we're still bullish based on minute by minute. We've got that swing. We've got that inversion taken out here. Now that we've traded through the fair value gap, we've come back, found support at it, and we're looking to continue going higher. I think the last time you were here, Michael, we were talking about back pain and surgery and all that stuff. And just a shout out to you and your wife, your family. What you've been through lately is takes a lot of support, bringing a family united together to go through what you've been through. So my heart goes out to you, and same with all the other people in our channel here. Our heart goes out to you and your family and your wife for the loss of her mother. So we wish you continued support on the family side. All right, where are we sitting here? So anytime I see it breaking a new high, I'm looking for these little signals, these little fair value gaps that occur on one side, taking out the high. And then you want to look for a break in structure to the downside. I come back, a revisit of either the fair value gap or the order block that initiates the run above. And then we're looking to enter into that for a short, but counter trending something that's clearly going higher right now. We're just trying to see how we can stay in price action minute by minute. Stay on the horse till you get thrown off. That's the whole purpose of this, is to show you how long we can read the tape for and stay on the horse. One more minute before the opening. Morning, David. Erica, good morning. Welcome, ICT. For your information, Darren does an amazing job representing everything ICT, supporting growth of people. I love you, Dave. Thanks, buddy. Fernando, good morning. Morning, Erica. I hope you had a great time. Your hubby. Where is your hubby, Erica? I haven't seen him for a while. There's our open. We'll wait to see what kind of offside. There's that little pop up first. This is here to take the Judas swing. Let's take people offside here. ICT's in the house. How's the Canadian drywall? My drywall is terrible. I've gone over it multiple times already. I have, you know, when you don't know what you're doing with drywall, you buy, you know, the quality of a drywaller by the number of buckets they use of mud on the wall. So that was our little supposed rundown, and take people out believing that we're gonna run down lower right now. Yeah, so I'm on my second bucket of mud, and all I've got is one little notch they've carved out of the wall just to recess the fridge. And I've had to float the walls, where I've had to take off the tiles, so it's, you know, it gets all lumpy and stuff. So I have to float that wall out. I've never done that before. And now we've had our fireplace done. Now they're going to be tearing up floors next week. So these are all going to be, look at how this has come back. We have the wicks do the damage. Once this kind of settles out, I like to see this continue to provide a level of support here. I haven't seen anything in here yet that tells me that we've got a big swing coming. So yeah, the drywalls in the kitchen is mostly done. And I think that plug, you know, you get these big plugs and you got to patch it and fill it. And you get this little, you run your hand over it and you got a little divot in there. My dad was really good at that. He was a body mechanic. So he could run his hand over something and he could find the slightest divot. I'm like, I don't feel that. He goes, oh yeah, it's right there. And he's like, he was amazing at, I shouldn't say was, I suppose he still is. He's not dead. He's still going. But yeah, I go over that wall and I can just feel that little slight divot there. So I have to go over and re-mud it again today. Today should be the last day for mudding. And I should finally be free of the kitchen mudding. And then it's just, we had our little painter in the other day, and he says he's going to get to that in July. I got all my family coming over from England, so July is where he's going to hopefully get in here and get that done. They come here right at the end of July, beginning of August, so I'm hoping he can get all the painting done by then. All the furniture comes in June. It's going to be crazy. Look down in here. I kind of look at this bigger, like this is an overall range now that we've extended past here. And if you've got a premium inside this, I look at these premium and discount areas. So if I lose the discount area on the downside, we start breaking structure, then I'm temporarily bearish. Even though overall we'll look like we're going longer. And we're looking like we want to take out Friday's high. So now we have a body trading below here. We got 1 hour here. So if we take out this low, I'm looking for this kind of swing action again. Look for this order block here, mean threshold here to hold price. The high, the open, and then the mean threshold. I think, like as Michael said before in the past, if we have a fair value gap below us and you've got this that is above the 50% mark, of this whole kind of range here, that we're going to target this fair value gap below us. This is sitting right at 50%. I want to see this hold or the mean threshold hold. If that doesn't, then look for a return into this fair value gap below us here on the hourly. What trade here? I want to get above this one. Hello, David. Thank you. He's with my husband's daughter. Graduation ceremony. Yes. Husband was finishing with the guys. Good morning from Kenya. Johnny, good morning from Kenya. Welcome, my friend. Welcome. Erica, good morning. Darren, being forever. Erica, fishing. A lot of you went to the 15-minute fair value gap and down closed candles. So now that we've taken out these lows, we return to that hourly order block here, right to the open. See that? Nice return to open. Now we break the high here. Now you're bullish inside this range. All the time we have a close. I want to see it close above this candle here. And note this little imbalance you see right here as well. There, we've closed above it. So now I'm bullish. Inside this range, we're bullish. And if we go below this, watch it would be below this lower one here to go bearish again. Then I'm looking for a price leg action. The back inside here. Again, if we get a body break below here, we're stuck between these two here. You want to be above them. If we trade below them, then we're looking for another run on the low, or at least a rejection block here. And keep your eye on that mean threshold. If we lose that, look for the 50% of that overall range here. New York Open midnight candle. run these lows. Look for that fair value gap below us here. Now this is where they're just, as Michael says, we're kind of setting the range from 9:30 open till 10 o'clock. We're digging into that fair value gap on the hourly now. Oh, we see that small little hourly fair value gap sitting right there. It's now an inversion. Let me make my chart a little bigger here. See right in here, cut through the candles. So here's our hourly. Let me get this over here now that you know where 50% is. Consequent encroachment. Now remember, we could just get support here. That could stay open, push higher. And all we're looking for is just these areas of sensitivity. So if we hit 50% and continue through that, my eyes go over here. So let's go back to 1 minute. That's where we like to stick around. Now that we've taken out these lows, you're looking for that opportunity for a run back up above the highs. Just don't forget 10 o'clock. Usually you see it 10 o'clock. Take out a little high or a low, and then the reversal. And then you look for your silver bullet entry. Patiently waiting for the reversal, yeah. Those reversals are happening like crazy in that Bitcoin. Not a fun one. Wouldn't, well, like I said before, I wouldn't buy Bitcoin, but I do like to trade it. It does give you a lot of reversal opportunities in there on a 1 minute chart. Michael, I don't know if are you aware of the ICT index for your stuff? I don't know if you're, but it's a great way to stay germane with your teachings, like word for what you've said. I don't know if, are you aware of that IO? That's like an AI around your materials. All it does is take all your material, and any questions you have, you can type it in and it will search all through your material and look for word what you said, and then find your reference to your video and then put it right there on the screen. So if you ever have any questions and you get people like me or somebody else that may take something of yours out of context, you can go there and actually look at it word for word and see what you said. It's pretty amazing. It's like you can literally ask ICT his question and he'll take you right to where you talked about it, what video, and it'll even move the video marker right to the time where you're saying it and you're describing it on a video. And it's a free index. for all your materials that you've posted on YouTube anyway. I didn't invent it. We just found it and it works great. It's called ICTindex.io. It's right here. I'll show you. So you can come up here and you can say initial fair value gap of the opening range. So it's called ICTindex.io. You type in the question and then it says, here's the whole, or here's the answer. This is what you said. Here's the video. You click on this and it takes you.
So stop wrestling with me. You guys, you make arguments.
So you go right to there and it answers your question, brings you right up to your materials. So it's an amazing piece of information to ask. It's like asking ICT live, and it gives you all the different references to that you talk about. It's out there and it's free. Nobody's trying to make money off of it. The guy's just wants to keep your concepts solid. So I promote that just to try and keep your material as germane and as real as you can. It's like, look, though, if you don't ask me, go to the ICT index, ask ICT. That's as close as people can get to asking you live. Do you remember mentioning such and such? And you can just type it in there and it will find any reference to your material there, which is, I don't know if you like that idea or not, but somebody came up with that idea, and it's a great way to kind of keep everybody constantly coming back to your material, constantly coming back to what did you say, and we try to promote that on our Telegram page and say, hey, look, we try to keep it as germane to ICT materials. We don't start getting into batwing patterns and MACD and all that other Elliott wave stuff. We just try to keep it as germane as we can to your material. And so far it's going really well. We got some super keen people in there. There's awesome guys like Dave and Fernando. They're doing really, really well with your material, studying it. They're catching some awesome patterns that work. Their bread and butter setups that look really, really great. This is what they're doing. So there's some, and we got Tommy. Tommy's got an awesome story, and he's busting his hump there trying to study this material and keep it as germane as they can to what you've taught, which is, we got to thank you for everything you've put out there. It's amazing. It's been a game changer for sure. And when you win this Robbins Cup, man, you realize you're going to get flooded, right? Your whole YouTube channel is going to blow up. Like, you've already got 1 million people now. You win that in the fashion that we expect you to win it, you're going to see your the whole thing, all your material, people will suddenly flock to your material out of nowhere. You're just going to get swarmed. Like, how does that guy get that kind of results? Then you're going to be inundated with people. And we're just trying to build a community of people here that are using your stuff, that are trying to keep it as germane to your material as we can. So yeah, it's been fun. And we've got like 700 people now. 700, Michael. 700 people in here. That's awesome. And you know what? If that's all I ever get is 700 people, I'm happy with that. We've helped so many people already, get their funded accounts. We had Chris just the other day, got passed his funded accounts. So it's exciting. It's really exciting to see how people are using your material and getting ahead in the world. It's lovely. It really is. Anyway, let's get back into this. So now I'm looking, I don't want to see this break to the downside here now. If this breaks to the downside and we close out here below this candle, and it'd have to be below this candle, a body close below that, not a wick, then I'm really stuck between here and here. It'll be just a wait and see where it starts to react from there. This would be the potential for, even though we did not take out that high. Yeah, no, I'm looking for this to continue back up. Watch right here now. Keep your eyes right there. Now that we've taken out this low on the hourly, we've come back into this fair value gap to 50% of the range. If you look at this whole big range here, and you'll see I'm a fib nut, Mike. I love pulling that fib tool. So we just dipped over into the discount. That's all you really need. Grab that discount and start going. Now we've got our premium, or sorry, return to it. You want to see this tap here? I want to see that stay open ideally, but we could come back, revisit this right to the mean threshold and leave from there. So watch this area right here. Yeah, it's pretty neat, Michael. I love that ICT index. It's very helpful. You can double check things quickly. It's actually really good. I sent it to a friend and they love it. Crazy good idea. That's awesome. It's like an oracle. Well, ICT is the oracle. The AI just directs us. Thank you, Darren, for your awesome comment. Tommy, you're going to be a guy that Michael will interview one day, I swear. If you keep focusing on your life story is amazing. I tell you, you're going to have, you're going to be a person that people are going to want to listen to your story one day. Good morning, Darren and everyone. Tristan, good morning. We have ICT in here with us this morning. Fernando, thank you, Darren. Your guidance is invaluable. And with ICT Index, it's like having a virtual teacher to help understand key concepts. So again, keep your eye here. And we're coming up for 10 o'clock now. It sounds like your kids are doing really well with your concept as well, Michael. That's excellent. You must feel really proud to have your kids take the mantle and start moving forward with their lives using your stuff, man. That's got to make you feel proud. Do you have any of them actually looking to carry on with doing online stuff, like taking over where Dad was and start their own channel? So far, we're finding some support here. We want to see if we can take this high out here and continue pushing up higher. So now we're not going lower. Now we're bullish. And I see this reversal happening right here in a higher time frame premise, which was down in here. We just broke the 50%. We went all the way back through this fair value gap, like we were talking about. If it's greater than, I think you mentioned this, Michael, on the 18th. You mentioned if there's a fair value gap below you and you have an order block that's above that 50% range, look for a revisit of that fair value gap below you, which is what we got. I think that's what you said. We can always check with the ICT index later. And then you get returned to this 50%. You just popped into the discount. I like that. Then we look for a reversal. So these key areas, when we're looking for these key areas to hit, we look for this reversal pattern to start happening, and then you can start catching this for a long. Oh, and there's one in Bitcoin too. I'm going to show you this quickly in Bitcoin. We have this reversal right here. See how we take out this low, take out these lows. We have this reversal happening right in here. And this is what Dave just chomps at the bit for. So I have a body that breaks the high of the fair value gap here, and then we return back into it for a long, and then you go for the discount array to premium array. So that would be my upside objective. If I was aiming for an upside objective, if I was going like to like array inside a larger range, then you look for this fair value gap that we entered into here, and we're aiming for that fair value gap there. So we'll come back in a few minutes and see how well we did for this in terms of a upside objective. And then if we clean that out with a close on the body, then you're looking for the highs. So if we break this on the downside, we're in that consolidation that we talked about before. When you get into consolidation with only one fair value gap and you bump below it, then you're going lower. Then you bump above it and you're going higher, and you're stuck, unfortunately, inside that range. Then you look for the outermost candles, the wicks, the rejection blocks, just trying to stay inside a small. What I look here now, Michael, is for this low, that high, and I kind of stay inside that little range. And if you break outside of that, look for the rejection block there. We break out of that and start pushing down lower, then you're bearish again. Now that if we trade below this on a close, now you're bearish. So you literally switch from bullish to bearish using your fair value gap as your inversion, and then look for your higher time frame. So if we lose this one, look for your discount array all the way down in this larger range that we're in. We're turning all the way back down to here. So if this finds support here, you stay on the horse. Don't go long now. You're looking short. The moment we close below this, come back, find support. And if you're super sniping, you're going to see, and I know Michael's probably cringes when he sees this kind of super sniping type of things. But if you did take that as a long, you're aiming for your first high objective, 50% of that wick. You got to pay yourself. Now, obviously, you're not going to pay yourself inside a small little range like this. But if you did go long there and you broke below that, your stop losses here, your fail safe would be as soon as that low gets taken out, this one trades back into it, you break. That's where your ultimate entry is, right here. So if you go short from or long there, if it trades below you and you go, I'm on the wrong side of this, the next candle trades back into you, break even, move to the sidelines and wait. Your stop loss is here. A fail safe is a different thing from and I know it's not something you've taught, Michael, but a fail safe is just kind of your way of going, well, am I on the wrong side of this? If I'm on the wrong side of it, I can get out quick by coming back to break even and wait. When you're in this consolidation, this is where you can get beat up pretty bad inside here. So you'll see that close above. And we're going to wait. We got one big monster candle here. It's just been validated. There's a little imbalance. Keep your eye on the little imbalances. If your stop loss is down here, the fail-safe, my fail-safe would have got me out here, and I would have been waiting for this to return back into here or take out this candle's high and return to it before going higher. So now you're bullish that you're above here. Look for a return back into this candle here, or these old highs, and the next little inversion or fair value gap above you here. And this is where you want to see that stepping thing that Michael talks about, right? That little mountain climbing out here in the mountains in Alberta. That's a nice little analogy he came up with. Now you find that little step and support in the rocks that enable us to keep marching higher. So here's your 10 o'clock now. So you look for your silver bullet. Would these be wonderful little silver bullet opportunities to run back into that range? Return back into this fair value gap here to go long, aiming for the liquidity above the market up here. I was just listening to their Study this morning, a new episode. Wants to get better, and I mentioned it. Caleb asked me if I would help him with the channel after he gets more experience. Oh, good for him. That's excellent. I like to see Friday PM equal lows on the return, regular trading hours. Fridays equal lows. Ranges now. What's that? Threshold. Now, do you find, Michael, that when you're looking at these silver bullet entries, that if you're looking at a wick, I was thinking that inside an hour, if you have a wick, the wick that forms usually have that open, low, high, and then the close. If let's say we're bullish here and we see the open, you can get these down close candles in that first, or like the fair value gap on inside that wick, and the wick can be in the first 10 minutes or so, and then you get a more stable silver bullet possibility that you can get caught. Can you find that you can get caught in a wick going down instead of catching the meat of the hourly trade? Like I look at the wick as that potential that could take you in the wrong direction. There sometimes you get a silver bullet occur in that first wick part of the hour that takes you in the downward direction. And if you waited for like 10 minutes, I guess it all depends on where you are in terms of bullishness in that hour. 10:01. So now we'd like to see a return into here. I'd like to see that stay open, just to return into this one, back to that order block, and then continue pushing higher. Barry's in the house. Good morning, Danny. I don't know who Danny is, but so now we've got a body breaking above, come back, find some support in that consequent encroachment. Now look for this. Now, if you're in on this, again, if you're pulling your fib tool to manage your trade, if you're not really strong with your PD arrays, then at 50%, you'd be pulling to break even. So if you're entering into here, and this was where your stop loss was entered, and you got in on your trade, again, my fail-safe would have taken me out there. So if you would use this as your fail-safe, your stop loss is here, you've entered in off of this swing, and you're going long 50%, you'd be at break even, then 62 to 50. Because if this is a reversal, a potential turnaround, watch for this high here and this order block here. That's right around 62%. We've got all these extra PDAs. I'm actually going to get rid of this one here. So you take 50% of your trade off at 50%. This is like a super sniper. 50% off here, then 10, 20, 30. And this, as we get closer, you're just trailing your stop loss up behind each one of these, so that if this is the reversal, it gets you back in. You've got optimum trade entry reversal, and you've paid yourself on the way up. It's more of a skittish approach, Michael, to instead of trusting that high, pay yourself on the way up. We're all about pay the trader as quick as you can. Like you say, man, just put money in your pocket. As you get better and better, you start trusting those higher PD arrays, and you can just ignore the lower time frame stuff because you trust that that's an upside objective that you're going to reach for. Swing here, taking out these highs. We return to that breaker here. Come back, found some supported here. I like to see this reaction off of here like this, a nice snappy reaction. Get through the mean cap threshold of this candle now. It's really nice that you get out there and you go to other live streamers, Michael. I think this is awesome. It's nice that you pop in and see how other people are doing. So remember, you had 50% of your trade off if you were down here. I want to see this provide more support and just start really ripping out of here now. Watch this area right here. So the bodies are respecting that. Wicks do the damage, just returning back to this inversion. Push higher. Now we're looking for 62% of the range. Remember, if you've got 50% off here, you break even. Hit 60, everything, whatever's left of your trade moves to 50%. So if we do get a revisit back down here, you'll be in full profits. I like to watch others think or execute over price. Some bird watch. I like traders be them. Silver bullet time. Watch traders be themselves. Yeah, I'm a firm believer in try and stay in price action as long as you can. I liken it to being on a horse and it's trying to buck you off, right? How long can you stay in price action? Using these fair value gaps and inversions, I found is the most successful way of staying in price action. So the whole point of this is to try to read price action, and when it changes direction based on these little inversions and fair value gaps that they break, and which ones provide support, what little tiny ranges that we're staying inside. Like every time there's a new swing point high or a swing point low, I look at that as like a mini range that you're in presently. So if we get that swing point there, we're between this candle's mean threshold and this low candle here. So if I look for a premium array and a discount array, and I say, well, inside here, if we don't start pushing through the mean threshold of this candle to go higher, then we're inside this range. So we're between this premium array. I want to see it break to the downside on a close. If it breaks to the downside on a close, then I'm inside this smaller range back to that little guy right there. So inside these two candles, those three candles, I use the upside, the smallest one or the highest one first, then all three of them. So see how we're now below it? We just traded below it right there. We come back inside. Now we're looking inside this range here. So if you're looking for a premium back to a discount, this is kind of the area that I'm looking for right here. So this is not even part of my equation now. So you kind of go here. And yes, I do love this fib tool. It really helps to kind of establish where the 50% line is. So this is all premium here still. So we're in the premium of the premium, discount of the premium. So you pull your fib tool, do your quarters. So there's like these smaller little tiny ranges that you're in. So you look for the order blocks above and below. And I just try to stay in price as best I can, constantly looking for the premium discount, and then looking for the discount, the premium of the discount, and the discount of the discount. Does that make sense? I know it makes sense to you, Michael. So you watch where it jumps back and forth between the two, and then it starts to really eat up that premium portion. So it's either going to run back into the discount to gather up some orders to run higher, and here we've got a premium. We've got another premium, which is in the discount portion of that. You see where you got this one here is in the premium side. This one's in the discount side. So again, that's the sucker that's holding price for me. You're either going to bust through it and start driving higher, or it's just going to hold price and we're going to start working this premium, discount premium inside that larger range here. And it's just minute by minute, just trying to stay on the horse. What area do I think it's going to come to next? How do you stay on this inside this price action? So my eye goes right here, and I want to make sure that that gets above that on a close, and we still find support above here. All the time we keep coming below it, then we're looking for a run deeper into the range on a close. See how we just got these little tiny close candles here? And if we close above it, then you're looking for a higher price. And it's a premium and a discount. When you get above the premium and find some support at it, and you're eating into that mean threshold here, you're looking for higher prices. So we're still down. See that one just trading below here? See that candle close below? It could be super subtle like that, but that's all for me. All it takes is just to see a close below or close above, because then you get into these little consolidations and you only have one fair value gap. When you're inside of a larger range, you have a premium and a discount. That's usually if you're in a consolidation, a bigger consolidation, you can actually look for these premium and discount arrays that support or are targets for price. So now we're close. If we close above, look at the mean threshold here. Watch the close here. We got 21 seconds. Yeah. See how these wicks are just doing damage on both sides, right? So it's like, am I long? Am I short? Am I long? Am I short? And you always keep in mind our overall objective is to go higher for the day. We're closed above now. So that support's going longer. So if you're wrong here, you said, okay, now I'm going to go short. Oh, no, you're wrong. If we close above it, you're on the wrong side of it again. So just keep watching how we act on one side or another of this fair value gap and that order block. We're looking for this to fill. 18,330. Now we're through here. See that? Come back to the mean threshold here one more time. Pushing higher. And that's the, for me, the change in direction is when you start to see, okay, I'm running down below, pop up above. Now it's changing direction, going higher. So you always have to keep looking at these as potential algorithm changing point, turning points. I'm going to go lower, I'm going to go higher, going lower, going to go higher. This continues to support us going higher. And I like the opportunity to look at this. Now that we're breaking this high as the next price leg up higher, if we just pull from this leg here to the next leg up, look for this one here now to provide support. Remember when we're pulling the 50%, 62%? I think we're at least at 62 now, so you'd be pulled at 50. I want to show you this here. Almost 62%. So as soon as it hits 62, you'll take another 10% off your trade and move your stop loss right into 50% here. And if it comes back and takes you out, that's fine. You've made a for your entry here, 2070. That's 34, almost 35 handles. And you got paid at 20 handles. second. See this, keep providing support. Small range down. This is what we call high resistance right here. Do you want to be mucking around in this? This is one of those wait and see things, right? We've come back to this 50% multiple times. A little push higher. So this needs to continue to provide us a level of support. Continue pushing higher. That's like kind of the step on the 250. Sorry. Hello? Oh. Scammers. I hate scammers. So still watching here. I like to watch others. Some bird watching. Wicks doing the damage. I'm going to escape. Wife wants me to show how much you can save 20% on something we don't. All right. Thanks for popping in, Michael. Good luck. Good trading. Thanks, buddy. Appreciate you popping in. We're going into some breakers in 15 minutes. Could I ask ICT, which tool do you use in trading view to mark your PDA like that, red and green? PDA, red and green. I don't know what one you're talking about. Erica, what one are you talking about? Which tool do you use in trading view to mark your PDA like that, red and green? I'm not sure I understand what you're talking about there. So now your 62% hit. So look for your money would be pulled right up to 50% now. You'd be paying yourself at 62 and looking to go higher. Still finding support off of here, which is what we're looking for. Which is great. NQ is now premium. Fair value gap, maybe the silver bullet. Yeah, if we can get a return back into here or here. There's 70, so you bring yourself to 62. Pay yourself at 70. And you'd get taken out right at 62 if it came back and tapped you. Right there. You'd be out. But you paid yourself 50% of it's here. So the rest of your trade, 30% of whatever is left of your trade, would have been taken out right there. And this is where it takes off and you go, dang, I should have stayed in longer. But you're paying yourself inside this range at PDA level or at your fib levels. So if this now becomes optimum trade entry and this reverses and comes back down, which again, we're not expecting it to, but if it did, you'd be really happy that you paid yourself at 70%. And if it ripped all the way down here, you'd be like laughing. And that's a 27 candle. So we're expecting this to be a reversal candle anyway. At least back into here. Unless 27 makes us a new high. And then you got 30, 32. So here's your 27 reversal. But also the 15-minute bear fair value gap. Let's quit encroachment, as mentioned by ICT. The one premium discount premium. The one premium discount premium. Premium discount premium. All this is all inside a fib tool, Erica. That's what I'm using. Oh, are you talking about the okay, I think you're talking about when I do this one, when I use the template. I create a template called quarters, like that. Is that what you're talking about? I think this is what you're talking about, Erica. You just go into your fib tool, right click it, go to settings, and then click on here what you want for 25, 75, 50, and 100. That becomes your premium, discount premium one. And then I just called it in my fib tool settings, I just called it quarters. So it splits it up into quarters. And you can use that for not only the ranges of premium, and discount premium, you can also use it for splitting a wick up or a body up or a fair value gap up into quarters. So you can mash it up into quarters like Michael likes to look at for support and resistance levels. So yeah, I just made a whole bunch of different templates. One's equilibrium, so that just finds straight premium and discount, finds the midpoint. The second one is the fib retracement tool, obviously just the fib retracement tool. And then the quarters you've seen, and then the swing projections, which is you pull your fib tool and you want to project where it's going to go higher to 2.5. And you can do that all on your settings as well. When you're in the settings part down here, you just go template, save as, and then you give it a name. Then I've got TGIF Fridays as well. So I don't have to constantly keep coming in and rejigging the whole range all over again. Like the whole fib tool, keep coming in and clicking all the settings. They're already pre-made in a template. So here's that 70%. You'd be glad that you paid yourself at. That's why that fib tool works great. So now we've taken out a high here and here. We have a reversal happening here. That low gets taken out there. One candle. We will run back into this. We have a break in structure to the downside, come back up into that order block breaker. Watch that we don't get caught in a bear trap. So yeah, now you're closing below it. Come back and find support at that. That's why you pay yourself on the fib tool on the way back. And now you're happy you paid yourself there. And we were expecting this to go higher. Now you go from a premium to a discount inside here. This is the range you're looking at right now. This one to this one. So if this peels off, comes back and you get some support, look for it to run back down into this smaller range here. Congratulations, D, on Michael popping in. Hope he saw what we all see every day. Someone who knows how to read price. Kudos, thanks for everything you do. Oh, I don't know if he saw that. He might have been like, this guy's all over the place, man. But thanks anyway, Abs. I appreciate that. That's the second time he's popped in. I think that's he certainly didn't catch me at my best, that's for sure. But that's okay. It's nice that he popped in. He may come in, pop in again another time. I recall Michael was looking for the lower Friday PM session, so it's 18207.5 if it starts heading that way. Yeah, when he said that, I thought, are you trying to throw me off? Are you trying to say it's going to go somewhere and see if I'm committed to my direction? I'm going to stay committed to my direction all the time I see it. So that's why I kept saying, I'm still going to go up. But yeah, if it reverses, which we've got a reversal now, now there's a short. I'm going to try a short right there off this order block here now that we've returned to it. And the stop loss has to go above this high. I'm reading this book right now called Cracking Creation. It's what they're doing with all the genetics now. Incredible. Did that help, Erica? If you want all those settings, I think Derek was saying he could help you out there. I could help you out too later if you want. If you want me to show the settings again on here, I'm happy to do so. So now I'm bearish. Now that we've taken this low, this reversal here, and this one, and that on the downside. Anywhere inside here is an opportunity. Stop loss would go up here. If we close above this fair value gap here, inversion on the upside, then obviously we're going to get taken out. See how we've got these swings taken out this low here. I just saw this now. See how the body took this high out, came back inside here. Now we're looking between here and here. So I want this one to win overall. I want that side to get taken out on the downside because I've really got that reversal and this reversal overlapping. I just saw this here now. I thought, oops, I'm going short. Good. As long as we get a body close below here, I'm happy with that. Otherwise, we just returned from discount to premium. So this one is kind of a lucky dice roll right now. We need to see this close below here. If it doesn't, then we got this one to go long and this one to go short. So if we are going to continue pushing higher for this objective, then I got caught in a real deep bear trap here. But this is where you're supposed to close your trade off right there. And we're still above. See that? High resistance. This is a gamble here now, because literally it's telling me this is going higher. It's telling me it's going higher right there. This one's telling me it's going shorter. This one's telling me it's going higher. So I want to see it get below this inversion. And if we're wrong, it'll get above that inversion. So Derek did take the small reversal here at 950. Excellent. I'm going to wait. I'm going to move to the sidelines, take 90 bucks, move to the sidelines and wait. It's too, it could go in either direction right now. So you want something that's a little more secure. So I'm going to wait and see. This is when it's going to go straight down. And if it does do that, then I'd like to see a body break through there, come back, find support at it, then I'll get short again and put my stop loss up here. Because if it breaks that high, yeah, here I'm literally stuck inside this small little range here. You've got this discount array here. You've got a premium even inside that range. You got this premium up here and this discount down here. Now you have two ranges. So remember when we only had one and you're bouncing between we're going long, we're going short, we're going long because you had one. Now when you've got a premium and a discount, if you break above the premium, you're going longer. If you break below the discount, you're going shorter. And this is what we want. Now we see how we close below it. I told you, as soon as I get out, that's when Derek can get in. Well, I still have a live trade in there anyway. That's still going good. So if it comes back into here, I'll go short one more time here. It's high resistance. I'm just going off of this. Now you close above it again. Yes, you can argue both sides. Tell me you stay out. Do not do what I'm doing right now. I'm just shorting the idea now from this high here, and we've broken this low. Now, if that closes above, I gotta hope it comes back here and gives me an opportunity. Yeah, see it closed above. Come back in here, give me an opportunity to get out. Just wait now. Yeah, I even took a couple of bucks. This is when it takes off again. You gotta follow your rules, man. You gotta stick to your rule. If it trades above, I'm out. If it trades below, you can get, not that you're gonna get in on this now because it's just a mess, but see how it goes down? You're going down, then it closes above, you go up, down, down. This is high resistance, throw you off. You're gonna get beat up in here. So just keep watching it right now. Stay on the horse and say, I'm gonna watch price action. What is below me and what is above me? And I'm in, if we're looking at our premium discount ranges again, pull your fib tool on the whole range, do your quarters. We're in that premium, discount, premium of the premium part and the discount part of that whole big range. So right now we're in the discount of the premium. We're working that whole side here. So you might see a pop back up into here one more time, fill this fair value gap, clean out all the liquidity they're building above in here to run down into a discount, or you're going to see a bigger, deeper dive down into here. So keep this fair value gap in mind right here. And if we start eating through the mean threshold of this candle and this fair value gap here, you're looking for further downside. Here's our first indication that we're still going short right there. Body closed below, came back to mean threshold, looking for continuation on the downside. And then if it trades above, you're still stuck between premium and discount inside that higher portion still. So we're not going to get thrown off right now. We're still on the discount side. Derek's taking this short. I got thrown off. Derek's in this short. Whereabouts did you get in, Derek? 18,252. 18,252. Oh, you're aiming for the low. Okay. If we come back up into here, I'll get short one more time. We're going to get into that premium of the premium now. Premium, discount, discount, just over the discount range. Premium, discount. Here we go. Come on up. We're revisiting this one more time. See how it just ran up into the premium. Again, that's all you need. No different than that being a 50% line. Like this 50% line. That's all that is of the premium, discount premium. And if that's all foreign to you guys, go to the ICT index and look at how Michael breaks all these ranges, or breaks a candle, a range, fair value gap, whatever, into a premium and discount, and then the premium, discount, premium. I think it's early in the core content. He talks about how you break these ranges up, or break these the range up into a fractals, where you have a, just because it's going up and down here, it doesn't mean to say it's still not going from a premium to a discount inside the premium portion of that range. Come on, Derek. Let's get you some money today. ICT index? Yes, fiddlesticks. Go to ictindex.io. Oops. That's the one you want, fiddlesticks. Not the first, not this one. Let me delete that. That's the one you want. So the bodies of the candles are still sitting inside here now. Traded above. There's no delicious 10 silver bullet. If you looked at this one as the silver bullet at 10, this one here to go higher, you would have been taken out. This one here to go lower. We're looking for this to come right up into here now. And that would be filling right there. So right now you're bullish inside this range. I want that one to come right to me here. No, that could go there. I'll take that one there, and then we'll put the stop loss right above here. I'm just working inside this range for a short now, because we're now in the premium of the premium range. Now, at the very least, you can get a discount of the premium if it doesn't blow right through you. And again, we're counter trending something that looks like we're going higher. I'll take that. Even though it's 60 bucks. Add that to the last 90 I just got. That's 150. This is buffering now. I'll take it back to that little imbalance. Come back to this high again. This is not the way to trade. This is just playing inside a range here. So I'm going to wait. It's way high resistance. You don't even want to be playing in that stuff right now. Don't even think about this, Tommy. I had a good morning before the market. That's why I'm just trying to put a little icing on the cake just before lunch. Get ready for upside. Stop capturing. Why are you selling when there is a shift in market structure inside the range? Yep, I just traded premium of the premium to a discount. It was a small little $60 run, but there's the return back to here to provide support. I was just trading inside the range, premium discount, Chandra, catching as high as I could in here to a discount, just below that 50% of that line there. It's a high resistance. It's stupid trading. It's not really a wise trading at all. If we run through this again, you're still into a discount right now. I'm with Chandra. We're going higher. And really, we're stuck between this. See how we found this one here has found more support going above it than it does with support going below it. This one here has not got worked. So we've got discount premium inside that small range. We've come up into the premium portion of it now. We've worked the snot out of this one now. So you're either going to bust up higher or you got to start ripping through it now and start coming back lower. So now that we've come up into the premium of the premium range, now you want to see this really start tearing through here and get down into the discount range. So you could argue both sides. I'd stay out, wait and see. Just wait and see. I wouldn't consider this as a change of direction. I wouldn't consider it a heck of a, yeah, if you're looking at these highs get taken out as a shift. Change in direction right now, but this change direction. We've had this multiple change directions just off of this premium fair value gap here. And the only one that's above you inside this premium portion, if this is the discount one and that's the premium one inside the discount premium, that's the one you want to see break to the upside to continue going higher. Otherwise, you're just going premium discount. You're between these two fair value gaps inside this bigger range. Yaroslavna. That's what you want, Yaroslavna. Yaroslavna. I love that name. Take a look at ES. It's going to take its extreme range liquidity. Has it taken that high from Friday? What's the high there? 64, 264, 264. It's equal highs right now. I want to see that push up into that daily fair value gap inversion, consequent encroachment, because this one here has already hit that. Let's see that it's already taken out April 4th's high, and on Friday's high. I was taken out in Dow, ES just maintained an equal high, and NASDAQ hasn't even reached it yet. It hasn't taken out. It hasn't taken out the April 15th high, and hasn't taken out Friday's high yet. So we would want it to go up there. I want it to get right up into this inversion here, into the mean threshold, or consequent encroachment, I should say. So we're just in a consolidated mess of resistance, but we're still bullish right here. We're still bullish inside this upper portion of the range. And what's above us there? This here, and the top of that fair value gap fill on the other side here. This one's been filled. So now you want to see this really hammered down now, get through here and start getting into this discount range in here now, because you've worked this premium discount, more discount than premium. Quickly run up there. So you've established a lot of liquidity down here. You run up, you take this liquidity out here. Now you want to see it get some legs, get through this and get down into a discount. Pair all this lot up here with pricing into that, either the premium of the discount or drive right down into the discount of the discount. And the only way you're going to get there is because you're going to aim for fair value gap. Sorry, aim for a rejection block down here. This fair value gap, which is the discount portion inside here, is where I would be looking to drive price down into and see how it reacts off of that. These are your extremes. And this is your range that you're working in right now of that premium portion of a bigger range. If you can just put your quarters on here like this, you'll get an idea of what we're really working on inside here. You can see how it just runs above, comes back, runs above, comes back. Just inside that range of here. This is the big sucker you're in. So you're between this guy and this guy. That's why we were undecided which direction you wanted to go. And if you just keep looking at those bodies crossing above and below, that just tells you, now I'm up. Well, where could I be reaching for? Now I'm below. Well, where could I be reaching for? And it just keeps popping back up and running into that range again. So in order for this swing to be valid, we now have to get below this low. We have to break structure now inside this range to the downside. Now you're into that discount portion again, your premium. Now you're into the discount. You want to see this. What is it going to do? Is it going to continue to hold price again? And we're going to play this bouncing around. Or if we've done our work, we've just come up here, collected, filled that imbalance there, that SIBI. And now we're going to start pushing through. Who knows? But stay on the horse. Right now, you're neutral, right? Neutral to bullish, and now you'll be neutral to bearish if it closes here in 20 seconds. The 11 o'clock. Well, you're a bit of a poop show here. This is the 9 o'clock or 9:30 range to the 10 o'clock. If that's the opening range, where are we sitting right now? Right near 50% of that range. So you're looking at the 11 o'clock hour to retrace to 50 to 62% of the range between 9:30 and 11. And we're pretty much sitting there right now. So you can forget that idea. Watch that inversion there. Micro Q2 manipulation. I would love to see these highs stay intact and then us to retrace all the way back into this range here this week and then start running all the way back up into November or into June. Like I'd like to see a retracement back in here now and then a run back up and the June highs take all this stuff out. The first week of June, take that lot out. But I'll get last. We may come back up into here first and then roll over. I'd love to see these highs stay intact and us retrace off of here, even into the mean threshold, the rejection block here. And then just roll over and come back down into that range and then start pushing back up higher. I'd like to see it get into here. But that's just me. I'm just using that what I saw in the seasonal tendency on that equity clock for a retracement in the second to third week now. Yeah, we should be seeing a retracement come back into here. And then the big drive up. So we closed above, open, slam down. Now we're into the discount range. So they give you no opportunity to really see what they're up to here. That says we're going higher. Then it goes, nope, turning around because they closed right on the body on that fair value gap, all cutting through all these candles. You can see how that level was a very important level for providing support in the discount portion. Now that you've broken below it, watch for, now we're bearish inside this range. So not quite bullish yet, Chandra. Even though there was all this ideas that we've broken structure, this guy was the one that's, if Michael's right and we are heading lower, and if you were gambling, this is the one you'd be gambling on based on what Michael was talking about. But looking at it from a pure price action in the minute in the trade, now you can see you're bearish here with a nice bull candle, nice displacement candle. You want to see that come back and find some support off of here and just start hammering it down now. We're looking for this guy here as the next level of support. We have 1, 2 discount, well, this discount one here, and this overall premium discount range that I'm looking for reversal from there to here. So back to New York Open midnight session. It's a midnight candle open. This, so the bodies, we've taken out these lows. swing, body breaks above, come back in, go higher. I can see how it's giving me an opportunity to bail out here. Give you a couple of bucks and bail out. So I'm looking for this to provide support now to go higher. Now you're stuck between this guy and that guy up there. Catch it quick, you save yourself the heartache of going, ugh, am I underwater now? And I just saw that, luckily just didn't enough time to get $10 out of it, pay for that trade. Now watch here, which would put us right here. Just about to touch it again. Then that goes from discount to premium inside this. Well, actually it would be inside this whole range here. There's the discount one, there's the premium one. There's no 62 this time. 8:15, 5-minute breaker. Looks like it's holding. 5-minute breaker. 8:15, 5-minute breaker. Mm-hmm. I gotta get below here now. So we just 50%, freeze up on the 50%. Just dip into that little area there, gather up some liquidity, and you're back into that range again. Premium, premium, discount, premium, and just dip into the discount range here. And you're back into, I don't know which direction it could go into. If that comes up into here one more time, I'm going to get short right there. And I'll be just enough for the spread too. So it gives me I just don't think they're going to leave this untouched down here. You got equal lows here now. And now this will be in the premium of the premium range. It'll just take that out. It'll come back, rebalance that portion here. And I'm looking for it to run back into at least a discount portion in here. But you can see how this was the reversal to go long. Back into that premium portion of that range again. So you can see how you can play from a premium to a discount premium. So premium, you wait for a reversal to happen right here. And you're in the discount premium, you're out. Because now you've got to run back up into this way. So then you run on this one, back up into this one again. And there's nothing in here that will continue on the downside. So you just play off of this to go shorter till you see the reversal. Then you go long, higher, back to this one again. So this is like buffering like crazy off of this if you're going shorter. here. Bodies are holding on that. I'll be right back. Just gonna go to the bathroom. So we get a great entry there. Calls. Sorry, I'm just making coffee. On. Okay. Pumex. Oh gosh, I entered too late. I see ICT was in a chat. I mentioned him in Tanya Trade's live stream. Chat and asked him, did he ever join your stream because you do so nice a job. Wow. Thank you very much, Pumex. You're probably the guy who got him you got him to pop in anyway. Thank you very much for that. So that was very nice of you. Thank you, Pumex. Nice to get ICT to pop in every once in a while, but you know, he came in right when we're in the middle of all this mess. So we really didn't get a chance to impress him with what we do here, but that's okay. Darren's gone. Go lower. Go. We're gonna have to send you up so react. That's right. It's kind of like when Lauriston used to go to the kitchen and do his dishes. We're expecting Lauriston to. Thanks very much, Pumex. I appreciate it. I really do. Uh, I clearly did not get a chance to impress Michael at all, but you know, it's kind of nerve-wracking when he's in there. You know, you kind of feel like, holy smokes, you know, here's the boss. The boss is in here. And he's not a big fan of a lot of live streamers, so you want to impress him, and then you start to worry whether or not I just like it when he says, just be yourself. Like, okay, fine. If I'm wrong, I'm wrong. He can tell me, he can DM me and let me know that I'm wrong. Which he won't. He hasn't got time to DM anybody. See that premium rate to discount rate? We're right there. Now, if we're still going short, we're going to hold on to this puppy here and we're going to see where we can get her. It's going to be one of my hold days. This time, I promise I will try to hold it for a while now and we'll see what happens. I'm seriously going to hold it this time. Pumex, yeah, probably is there a percent? Yeah, I was wondering why we've had like 64 people in here today. Usually we're averaging like 30 or 40 people. So keep your eye on it. We got to get through this one right here. See, inside that range you were just looking for. Let me get rid of all this stuff here. We're still into that premium of the premium, discount of the premium. So you have your reversal that happens right here. The body trades below it right here. If we return back to it right there and then start leaving from here, that would be nice to see. We want to see this swing point here get taken on the downside on a close. You don't want to see it go back all the way back up inside that range again. Should I go make another coffee? Abs, you want a coffee? I'll go make you one. I wasn't sure how many times I hit the button because usually you do a triple shot of espresso, and I think it did 3 triple shots in there today. So I had to dilute it down with a lot of coffee, but we could be flying here. Robin Hood, good morning. You missed ICT in here this morning. Carlos, price is still in a range. Don't hold it. 1129, immediate imbalance. Yeah, you gotta watch this guy here now. Let's pull all the way through to here. I want to see this one hold. We got this premium one, and I see this guy right here is our discount one, or premium one. So that's the range you're in right there. Discount array, premium array in terms of fair value gaps, support, resistance. Off this order block, you want to see this order block hold price now and come on through. Right on through. Jeremy, hello, how are you doing? Welcome, welcome. How do you analyze to get daily bias? What time frame do you use to get daily bias? The daily candles. Get my bias, I go daily. We're looking to go long for this inversion here. Like the Dow reached for the inversion this morning. ES reached for it but didn't get it. Didn't even take out the old highs from Friday. It's got equal highs. So I'd like to see that hold now and come back into this 4-hour fair value gap and back for that little daily fair value gap below you here. I'd like to see it reach back into that and leave those highs untouched for a while. And then NQ did not quite reach the old high that we were expecting. We were, expecting that consequent encroachment of the daily inversion fair value gap, didn't hit it. So we're looking for, we just traded the reversals inside the day. So the bias was long, but now, and that potentially can still be long, but you have to kind of be quick and able to change up your point of view, right? So when we got down to here this morning, Dave got in on this long. We caught this reversal, or Dave caught this reversal. We saw it. We're talking about it. I would have been out there just because my whole reverse back into my price entry would have been break even from here. 1, 2, 3. There's 3 different entries there. So I would have got break even there. I didn't go into the trade. Michael was coming in to the channel about here, which was when all the nerves would start kicking in. So there's the reversal. And then you pull the fib tool. We showed you the fib tool reversal on the 50% all the way up here until you see this reversal happening here.
When you see that reversal breaking an old high, back into a premium portion of a range that you just opened up between the New York Open and 10 o'clock. That was the range, Michael, that we're talking about establishing. We were traced back into 65 or 70% of that, pulled off of that. You got your reversal. Then you got a reversal here. So this is why we've been in that kind of limbo for a while. Then we had this break below these lows. I was in here short, and then it closed above, and I was like, nope. As soon as it popped back, gave me $10, pay for my trade, watch it go long again. See, you break out these highs here, break below it. That candle there, it breaks below it, come back up inside this candle. As soon as we get if you don't get your reversal back into this area here, then you look for the order block that initiates the run up. So here's, we traded below it right here. Order block initiates the run up right there. Now you get short. So if you haven't gotten short up in here, which is where I was aiming for originally, which we got in, this is where you're going. So the daily bias was high. So far, we're not in our daily, our daily bias is not panning out for us. So you got to have the flexibility to know when price is changing direction, and you got to adapt to it. So you got to throw your daily bias out the window right now and say, now we're short. I have to stay short. So just because you have a daily bias doesn't mean to say it's 100% right all the time, Robin, just so you know. And you have to have the ability to not marry that idea and say, I've got to be flexible enough to change directions. And so far, we are. I'm more bullish here from a daily bias. 4 hour, 1 hour, 15-minute discount being respected, and a 5-minute created more. What for the 1 minute version for everything about PDA is trash. I don't sit, and I do sit aside now. I wasn't able to sit back. Okay. Amadeus Mozart. Haven't been nice to enter in a 933 fair value gap and don't trade in the first 30 minutes. I don't trade. That's fine. You don't have to, none of this stuff, you know, we're looking to just stay in price action. That's all. We're not trying to do a lot of trades. I'm just trying to show you how to stay in price action. That's all. Read it when you don't know that it's changing. When is it changing directions? When does price say I'm changing direction? And this is all we're trying to do here, is stay in price action. If I had one, I'd pay myself at the lows. You pay yourself, remember the discount array, when you look at premium to discount inside the larger range, premium to discount, see how we've made it all the way back here while still respecting that fair value gap there. We're inside it. Now we're still looking for lower prices. Now, if we get through here, this will be exciting, because now if we push through here, come back, find support at this, now we finally broke the discount array inside the range, and we're getting support to show you that we're going to continue, the algorithm is going to continue pushing lower. So I want to see it close below here, a body close below that, come back, find some support at it, and then we're looking for even lower prices. And we're looking for another dig back into this order block here on the daily. 4 hour, let's look at a 4 hour one here. Ooh, if we get below here, that looks really good. If we can get, let's see if we find 18,247. Let's move some of this into profit here. So it's going to be like a zero stress trade here. Watch right here on the 4 hour. Right here to here. Oops. 4 hour. Fair value gap. It's a reclaimed fair value gap. It's not an inversion yet. So we come back to the top of this 4-hour one right here at 18,247. Is that where Michael was calling for, 18,247? Look for support off of this candle here. I don't want to see it come back and revisit this, but I suppose it could. I want to see this provide a level of support here now and start coming back down. But this downside for 4-hour, I think if we take out this low from London's low, or the low created in Asia. $247, $257, $252. Okay, so if it's eating through here, watch this fair value gap here now. I've got no rebound other than this reprice. Body's respecting this now. I said I wasn't going to touch it, so I'm not going to touch it. We'll let it run. Thank you, Amadeus. Friday's PM session lows. So we are aiming for these lows, that they're equal lows down here. So that four-hour fair value gap looks like a place to come back and revisit. If you're going to go higher, this would be a great place to come back, revisit to get some strength off of that and run higher still. So that will put us at 852. So we're looking to take out these lows here. I'd like to see it push one more time back into that 4-hour. We'll see what happens, but it'd be nice to see it aim for there. See how this is providing a level of support. We're really between these two right now. You want to see this one continue to provide support and this one finally bust through here and start running lower. What's the overall range we're sitting in here? 50%. We cleared got back up into the premium array. Let's get back down to a discount one now. Get rid of this one. Clean this up a little bit. You all take your wives out for Mother's Day? You all take care of them on this weekend? $207-ish. They're just going for 207. 207. Oh, you're going down to these equal lows. Fridays. Oh, these ones down here. Okay. Well, we'll see how we react off of here. If we blow below that, then we're definitely going to go lower. And where are we going inside this range? Yeah. If we close below here, then yeah, I'd say we're heading for these. Right now, I'm just looking for these. We'll see what happens. Keep finding support off of that fair value gap inversion there. We've traded through it and then back to it. And this whole breaker right here should actually be above that breaker. I will leave it up here. This will be a fun trade today. We'll see if it just sits in. We're just going to let it sit. We'll pay for a trade if it comes back. That would be a definite break in structure. Continue. If we take my stop loss out here, then we're definitely going to go higher. I think bullish now above minor buy side. Liquidity and lunch hour deliver sell side liquidity. You know what? You could be right. You could be right. Right now I'm still bearish though. I'm not going to gamble on bullishness until I see bullishness. Right now this is still supporting price. This one here supporting bullishness. This one here supporting bearishness and bearishness. This one gave way. This one, yeah, this one gave way. This one gave way. So far overall, if you're adding them up, we're bearish over bullish. And we're still bearish here. So we'll see what happens here. It's a really crappy environment to be inside for sure. It's high resistance. This is not clean price action, folks. This is not clean. And because it's not clean, I'm going to move into here because that's a premium array. I'll lock in some more profit. Amadeus, first time watching your stream. Quite a gem. I found so much value here. Oh, you're welcome. I wish it was the price action was a little cleaner. That way you could see something more delicious. Oh, look at this. Look at this Bitcoin trade this morning. Like these are happening all over the place. Look at this reversal here. See that fair value gap here? Body trades above it. We come back inside it to go long. Pull your fib tool, trade your 50, 62% all the way back up. You trace back down into your range again into your second one, go long. Then you got the reversal happening up here. Body trades below it. You trade back up inside it. Perfect entry. Slammo. Take your profits below the lows. Oh my goodness. Reversal. Body trades above it right here. You trade back into it, and then all of a sudden it starts to degrade on you right down to here, and you close below it right there. So 1, 2, 3 different entries. If you look for your perfect entries for a long is right here, and if it trades below it, opens and starts closing, your get out before your stop loss gets taken. The perfect trade for a short is up here, because if it goes above that point, you can trade out, get long. It's gonna continue going longer, but that's your perfect entry for a short, because we're looking for a close above there or below there, and it literally puts you in, and you're just collecting ducats there. Reversal. Body trades above, trade below, takes you out here. As soon as you see it trade below you, actually it opened, yeah, it opened here. Start trading down, you would have taken out there. Reversal here. Reversal here. This would have been a real shaker, but you would have had some really nice entries. You wouldn't have got an opportunity to get in on that one. This one here, you wouldn't have got an opportunity to get in on that either. This one here, you would have got an opportunity to get in there. Trading back up inside this range from here to here. You would have got your exit right there. That would have been a nice little range to trade inside. Those are way cleaner than this. See how messy that is? That is just like, welcome to a cheese grater. High resistance, man. I can see why Michael just gets frustrated when you see all this kind of, well, not frustrated, but he looks at this and goes, ah, that is high resistance. Playing inside high resistance is really, really, that's more cortisol than your body really needs. But we're going to try and stay on price. So we're not bullish. We're still bearish. I'm still bearish inside this range here. I want to see, if you're bullish, you want to see it get above here with a close. Otherwise, you're between here and here inside this larger range. And if you pull that fib tool again, and you'll see us do this all the time if you're new here. We have premium discount, discount, discount. Premium discount, premium discount, discount, discount. So if you're in this premium discount area below the discount of the overall range, then you're looking between here and here to finally drive down lower. Or if we're going to use this as our support level to go lower, or resistance, we resist that and we're going to start driving down lower, but we got to get through the discount portion. So premium discount, 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 and this guy's overlapping that, and the mean threshold overlaps that area right at 75%, or the discount, discount, premium discount. See how they are literally over the top of each other? We want to see this guy bust it out, get below here, find some support at this, and then we've got some more run on these relative equal lows. Otherwise, we're just banging off that 50% range of the whole range here right now. So I can't say bullish or bearish. I say more bearish right now than bullish, because we're obviously in, this is providing a level of support, and it's in the premium range. So if we've hit that coming off of it, and now we're dipping below that 50% into that discount range, now you want to see that's got to be our level of support. If we get up on top of that, now we're going to go into premium, premium, discount, premium. Now you're running back and forth between these two, until you either get a big displacement candle to get out of this consolidation now and start to run back higher or lower. Now, when you're inside a consolidation, small little consolidation like this, you got to look for these higher and lower ranges inside the bigger range, which is the consolidation. So premium, premium, discount, premium. You see how it worked? The premium, premium, discount, premium, 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 discount, premium, discount, premium, discount. Then it went drop down. It finally got through that discount. As it's worked that higher premium area, now we get down to the discount area. Now you want to see that get worked and eventually start running for our objectives down here. These equal lows sitting on the 4-hour and these equal lows sitting on the Friday's equal lows PM session low. Now that would be great. Now that you've built some liquidity up in here, I think somebody just mentioned that. I think it was Amadeus or Peter. Yeah, Peter. Peter was saying that, you know, you could see this run right up into here, take this out, and then after lunch, like for lunch hour, clean this out and then run back down, which is why I've pulled my stop now into profit, because this is an area that you don't want to see it eaten through here. I have a feeling that this area right here is my area of concern. Right off the 50%. See it get through here. It's being supported right there. Inside that candle, came down and immediately rebalanced it again. It's all discount though. Usually the immediate rebalance is on this side. Snap up, come back down. See how that's holding price? We're not trying to pick any overall direction right now. I'm just trying to stay in price action. Stay on price. Where is it going? Inside the range. When it starts breaking out there, you start looking to your higher time frame objectives. If you're all reaching for these higher ones, say, yeah, if you're basing it on living in an hourly chart or a 5-minute chart, then yeah, you could say, I'm looking for it to run back up into this breaker right here before going lower. Like the body of that breaker, there's a little imbalance sitting right in here. Or all the way back up into here. All up inside that breaker on the 5-minute to continue going lower. There's your, which one is that? This is the midnight, open midnight candle. Look at how sensitive that area is. And if that's the range you're looking at, that's fine. I'm just looking at where we are right now on a 1-minute candle. Bullish or bearish inside this little range. Where does that sit inside of your 5-minute? Because you're going to have to wait for your 5-minute candle to do what our 1-minute candles are telling us. That's that level right there. I've got a feeling this level right here is providing some support to run back up to this level here. Right now I'm still bearish. We're still below this. The wicks are working in here, trying to get up there and getting rejected. And we're just sitting at 50% of that range. So higher or lower, take your dice and chuck them. If price goes above the 1145 down close candle, 1145 I might just be a 5-minute bullish. 11:45. 11:45 down close candle. $11.44 down close candle, I mean. This one right here. It closes above it. You're looking for bullishness in the next 5 minutes. Yeah, if you key off of just a basic order block, sure. This area really got me curious here. This could be bullish right from here. So if that closes above that, then you're bullish inside this range now. And the 5-minute people will be saying, oh yeah, I could have told you you're bullish a long time ago. I'd say, no, you couldn't. Not from here, you couldn't. But overall, then sure. You could say you're bullish on a daily. I'm just looking at 1-minute price action. How to stay. Now we're definitely bullish. Now I'm going to close that out. Because we're bullish. Now, if we get back up into here, I may load on that again. We'll see how we react off of here. If we come back up inside here, so we go from this, I swear to God, this looks like a discount imbalance to me. And we're looking for a run back up here. So Chandra, if that's one that you were looking at, as soon as you said it trades above that 11:44 candle, that down close candle, then you're bullish for 5 minutes. 1, 2, 3, 4, 5. You got it. You got it. That would have taken out my stop. Now you're between these two. Back into the middle of this range. So you've got to go discount. See, this discount's been worked, but the premium hasn't been worked a heck of a lot. So you've got premium array inside this larger range here. You look for that premium piece. Now, again, you're in a 1-minute chart. Extrapolate this. If this was a 1-hour chart you were looking at, or a 5-minute chart, or a 4-hour chart, doesn't really matter. You're still going to treat it exactly the same way. So right now we're bullish. And we're bullish inside this range to a premium. We're in the discount premium. As soon as we break that line right there, and there's an array sitting right above you. We've cleared out this high right here. Find support at this. Again, if we push all the way through this, then all we did was just run up into a premium inside this range here to get short. And in that case, then I'm just going to wait until after lunch, or until lunch takes a high or something like that. We can see another reversal happening. Right now, this is a real congestion. That's why when we had this one here, and I said I'd take one off here if I'm below that point, when this was here, you pay yourself at that low. Pay yourself in here. pay yourself at the rejection block, or sorry, the order block low or mean threshold, and then the rejection block. We didn't get the rejection block here, so rejection blocks, I tell you so many times, if you're new here, pay yourself at rejection blocks. So many times it comes up there, people keep thinking, oh, it's going to take these highs now, and look, hits the rejection block, then turns around and hammers all the way back down again, and you were denied running higher. Always pay yourself there. And if you're trading inside a range, always pay yourself at the order block and the rejection block and the old high. And if it runs through it, who cares? That's not the trading style you're looking for. If you're internal range liquidity, if you're just trading that internal range liquidity, pulling your fib tool and trading a reversal, let's say this was open here and you traded that right there. You got all 3 entries. So ignore that wick. You got all 3 entries and you're going long. You'll pull your fib tool from high to low. Retracement. So as soon as you entered in right here, you'd have to enter into, you'd have to take this one low here because your 50% of the range is already right here. So as soon as it came up to 50%, you move to break even. Now you'd be out. That wouldn't have worked. You would have been out at break even. You would have paid you half your trade would have been off right there. So it was a small, wouldn't have worked. Forget that idea. Wouldn't have worked. So now this is the step up. Here's your step. That's the place you want to get foothold on. When you're climbing the ladder or you're climbing the mountain, you look for these key levels. And if you break through them, you find out whether or not they're support. So you can continue going to the next one, find support at it, and then push higher. And if the order blocks line up inside there as well, you get support off of those. Then you continue push higher. Right now you're bullish. So Peter, this is your idea about taking lunch out. Now you've got, you can see you're starting to manifest your idea, right? So now you've finally climbed through this resistance and now you're finding support at it to continue higher for an objective or an idea that lunch hour would take these highs out and then we can continue lower after lunch. Great idea. I'm all for it right now. But that's only because we broke, it says I'm changing direction. That's how I look at it's a change of direction. This was very suspicious for me right here. You get above it right here, come back, find some support at it, and you push higher. These ones tend to catch me off guard sometimes. So yeah, definitely looking higher. I trade a funded account. I don't trade personal account. I used to trade a lot of personal accounts back in the beginning where I lost a ton of money. I did all the things ICT said not to do. I was everything that Michael talks about is what I did. All the things you're not supposed to do, I did them. I did them big time. I did them. And I lost thousands of dollars doing it. I think I went live after the first month of my mentorship with Michael back in 2016. He was so good, so convincing. I was like, this is it. This is what I want to do for the rest of my life. This is awesome. And I bought live accounts, blew money left, right, and center. So I paid for my tuition with real money, not demo money. Now I demo the snot out of this and just try to show you how to read price action. And then my life charts are over here, which you guys will not be seeing. But your this chart here, I just want you to try to understand reading the price and staying in price action all the time. Hopefully it will help to improve your entry and exits. When you start to see things changing on you, changing direction, finding support. So it's staying in price action. That's my objective, is to show you how to stay in the price action and not be, I'm not too influenced by the higher time frame stuff. That kind of gives me my direction for the day. But ideally, I just try to stay on this 1 minute chart constantly. When it changes direction, how to stay in it, and then how to read whatever range that you're in. What objectives are you aiming for? So discount array, premium array. I didn't call this one as the discount array. I was just mentioning somewhere in here that this area is really curious for me. But anyway, that's your discount or premium portion. You want to see that get above this now, and I'll start pushing higher, because that's our next step up, right? We talked about that back here. And see that stop loss I closed out there. As soon as it broke that there, I go, I'm out, because I know it's going higher. So now you could buffer this and say, I'm going to enter in again there and start this whole trade over again. Say, now I'm going to go short from there back into this area here again. And those of you who are CAM model people, 1 to 2, premium discount. And it's not a Michael, it is a Michael trade. Usually when you see a consolidation, you'll see a trade above a consolidation, trade back to the top of the consolidation. That's what I call a CAM model one, consolidation attack model. It's still a Michael thing. He just never named it. So I just put a name on it. It's still his though. So consolidation, body breaks above, come back, find support at it, push higher. That's a CAM model. CAM model 1 is from the wick to the body. CAM model 2 is to the mean threshold of the whole consolidation range. And a CAM model 3 would be like if there was a leg that took this out and then went higher, that CAM model 3 is 50% of that leg. So there's your premium array. We're hitting it now. Now, do we find support? Well, this was the support to go shorter or to lower, and we took these lows out. This was the curious one for a reversal. I'm not going to call that the reversal, but for my own journal studies tonight, I'm going to be writing that in there as a possible journal entry for keep my eyes on these moments where we have a break below the low and you get these wicks forming, and we have a displacement candle above. So we're looking for the same kind of thing. So now we're back up into here. So what you want to see is this come up here, hit it with a wick. Body could go, or a wick could come all the way up into this candle's mean threshold, as long as the body closes below that spot right there. You could even go into the rejection block. But if we start having a body close above here, and we come back and find support at this, then we're looking for the highs. So just keep your eyes right on that area there. So mean threshold of your bullish 5-minute candle here. The mean threshold lines up with, funny enough, our fair value gap right here. So do we close that on a 5-minute candle above that or below that? There's the body or the wick of that order block. There's the body. There's the mean threshold right there. Now see how we had a body close above this? So we're going higher. So if your stop loss was sitting here, if you put your entry in there, and as soon as that closed above, you better close out your stop loss because it's about to take you out. It could come back and tap here, give you one opportunity to get out. So if it comes back and taps that, and your entry was right there, this is why that's a perfect place to enter, because here's your opportunity to break even bink, get out right there. Now, if it trades below this again with a body, a significant body comes back up, finds support at it, then you're looking for that change in direction again. Right now, this is still telling me we're going longer. So fair value gap here. You can pull that sucker all the way down to there. Now here's where you can get that trade below, trade above, trade below, trade above. So short, long, short, long. Right now we're long. And we're targeting these highs. We've got more confirmations. Remember, we're talking about this step up. Now we've got a step up. It's a little muddy here. You sunk into it a little bit, but find some support at that, and you'll continue climbing. And we're in lunch hour now. So if that held off on that rejection block, see how it's hit right? Oh no, I didn't quite hit it yet. We'll see what it does here. This is why you pay yourself at rejection blocks, because if this high doesn't get taken, you'll say, ah, I see what he was talking about. That it just rolls over, and now this becomes the new consolidation lunch hour range, and then we finally come down, clean out some of this, then run back up and finally take that out just before 1 o'clock and then slam it down. Like you get this consolidation thing in here, building liquidity on both sides of the market, then run up, clean it out at 1 o'clock, slam it down. How much is my biggest win with ICT stuff? I think it was 18. Let me have a look at this one here. I think it was like 54 or something like that. Some retarded number. 13. On average, it's anywhere between 200 and 1,000. 2,000. I think I had a it was either 15,000 or 6, 5. Oh, 55, 494. Yeah, that was a Bitcoin trade. I get a feeling we're going to come back into this range again now. YM is lagging behind everyone and trying to push back down. How did I learn ICT stuff? I went into I took his a buddy of mine when I was paramedic up north in the oil patch, and a buddy of mine was talking about Michael back in 2016 and was saying about how this guy was amazing at what he did. He says he's offering a mentorship. He says it's like $150 a month, and I'm like, I'm in. I says I don't know anything about it. So he said, yeah. So I looked up Michael's stuff. He was taking memberships, and 31st of August was his cutoff day, and I got in just before the end of the first mentorship, and I didn't understand anything. I didn't know what. And sorry, Derek, you have to listen to the same story over and over again, but I didn't know what Forex stood for. I didn't know what it stood for. I didn't know what cable. He was talking about cable and fiber. I thought I had to get cable. I had to eat more fiber in my diet. I didn't know. I was trying anything. I had zero. I was green as grass. And candlesticks. This was the first time I was really encountering candlesticks. I'd seen it a couple of times in passing, but never paid any attention to them whatsoever. And yeah, got involved with ICT back in 2016. And I've been a big fan of his ever since. And I've put in mucho hours. A lot of hours, spent a lot of money on it, did a lot of stupid things. Argued, wrestled with the market, angry traded, revenge traded. I've done it all. See how we're now below? We're below here. This is where you can go back and forth, back and forth. That's that whole like bull flag thing type of thing people look for. Looking for higher run premium discount, premium of the premium discount, back and forth through this inversion here. So now I'm bearish inside this range. So you don't get your high taken. You don't even get the rejection block there. See how close you came? You don't even get that. So anybody who's aiming for those highs right now, you're going to start getting squeezed. Now that we're on the low end of that, unless it busts through this again to the upside, I'm bearish inside this range now. Well, this small range here. And you have a premium and you have a discount. So from here back into this range here. I'm not sure. I think YM may be leaning that way. It was much easier to trade today. Fiber, cable fiber. We must have been on the same boat. You were the same way, Abs? I said, right, when he was talking fiber, I'm like, what the hell's fiber? What's a fiber? Do I have to have that? He talked about cable. I thought, I got cable. I got wireless. I got, fiber optic cable. I should be fine. And then he talked about the beast. I'm like, oh my God, beast. What's a beast? And then you find out that it's China or Japan and British pound is the beast. It's like, oh, so I literally had everything to learn. And I was so happy because he used to get a lot of pressure from people in the beginning he's like, come on, man, let's just forget this beginner stuff. Let's move on. Let's do some more advanced stuff. And Michael's, look, I've got an agenda. This is what I'm going to do. If you don't like it, leave. And back then we had 800 people in it's like 850 or something like that people in the mentorship. And we lost a bunch at the beginning because Michael wasn't moving at their pace. And he was building this whole ICT. He was trying to lay it all down for his kids as a legacy piece for his kids. And then people started stealing his shit, which was such a shame, Michael, I'm sure, would have felt a lot more supported had people not try to steal his stuff and then call it their own. It's such a shame. You'd sit there and go like, what are you saying? Leave his stuff alone. Just learn, man. He's here giving you he's giving you the goose. And everybody's trying to steal the eggs. It's like, oh man, he's trying to give you the goose. And you just don't get it. And then you got people that are going to steal your stuff. Like, whatever, go ahead, steal it. If it makes money for me, it'll make money for you. So go ahead and steal it, call it your own. unfortunately, just don't go charging other people for it, but they did. They stole his stuff. So it was a shame. And it's a shame people have treated him the way they have. Mind you, he does get in there. Like, he loves to get a good troll by the throat. When he was in Twitter, holy smokes, he could troll like the best with the best of them. And then when he goes on his rants, I used to love sitting back in the day. He'd be live giving us his rants, because back in 2016, we'd be live with Michael. Like I'm live with you right now. We'd be live with Michael, but we wouldn't see him. He would just go on a his server on the side, and he'd be doing the trades, and he'd be pointing at things, and we'd be watching him for an hour or two, and then he'd say, all right, I'm going to be up tonight in London, be awake, and meet me on here at such and such a time. Then we click on the link, and you'd be up at like 2 o'clock, 3 o'clock in the morning trying to stare at charts while Michael's in there trading London. And he used to get tons of questions coming in, and it used to distract him. So he went off the side there and said, we're not going to bother with that. I'm just going to show it to you. I'll answer your questions with what I teach. Write it down. Your questions will be answered somewhere in the teachings. Trust me. So you just write all your questions down, and sure enough, they'd be answered. And that was every day. So when you're on if you're on his mentorship Telegram page, you have all the cool content there, but you don't have all the little day-to-day conversations that he had with us every single day. You just get the videos. We got him every single day, and sometimes twice a day, and for hours. And then when he'd go off on these rants, they're so much fun to listen to. His tinfoil hat thing, I used to love listening to him. To like get a coffee, put your feet up and just listen to him go. Then all of a sudden he give you a nugget of information. Like you just go, oh, that's amazing. And you'd be jotting down notes. I've got so many notes. I've got binders, and I've showed you guys my binders before. I won't do that again. But I've got binders with a screen capture. I'll screen capture something, and I'll be making notes, and I'll go back and I'll listen to what he says, and I'll type in word for word what he's saying. Now you've got this ICT index.io. That's it. That's all the notes you need. You want to just reference your notes, type in the question, go look for it, and it will give you Michael live. It's such a great tool. Whoever invented that, man, what a great tool. It really keeps everything germane, so you don't have to worry about people misunderstanding or misinforming you. Like, I'm sure there's lots of things I say are not as totally accurate to Michael as they should be. But if you're ever in doubt, don't question me. Go to his ICT index and get the validation from the horse himself, the guy who codified the whole thing. Yes, totally green. Those stories never get old for me. Love the story of everyone who was found ICT to be the best trading method ever. Yeah. Now, years later and thousands of hours of studying, I'm okay. Study. I keep studying all the time. I keep trying to look at I'm zeroing in more now on a specific setup and more, and there's so much information that Michael's given us. And now try to just read the charts, read the price action, and just focus on small little sniper trades. And then look for the higher time frame. Once I can get in on the right time and price, I can catch a long trade on a day. Like you could catch the mean threshold of a daily chart high, or like of this order block, let's say, and you caught that, and you wait for that little swing happen, and you catch the swing, and you just go short for the rest of the day, and you're aiming for your lower time or your lower objective inside that day, or just the hourly. Then that's the part I'm working on now, just trying to switch over from 1 minute entry to hourly objective. So if I look for an hourly bias, and then that's my hourly objective. And then eventually I want to get to the point where I enter in on a 1 minute and I exit on a daily, because that's my objective. If I find that right on that spot, that's going to be my entry for the 1 minute. Close my charts, put my stop loss on, and go away from the charts for days. Come back. That's my objective. If I'm aiming for it, if it gets there in a couple of days, then great. And just do these mega trades, and then start doing that on the weekly, and then you just do a couple of trades a year, a couple of trades a month, whatever you want to do. But here's where you've got to, the rubber meets the road. You've really got to get down here in the 1 minute charts, and you got to read price action. And the better you get at reading the ranges that you're in, the better you'll understand the ranges you're in on a daily, and you'll see the precision here, and you'll start getting into precision here. You'll use this or this to get into this, and there is your objective. And you just drop your stop loss or your take profit down here. Your stop loss will sit up there, and away you go. And you'll start to trust what you see on the 1 minute chart, and you see it on a blatantly obvious on a daily chart. Like, holy smokes. It becomes so much more fun to play with. And I saw this blatantly obvious here that day. And then when I saw this and the reversal, then I knew we were coming back up here. And I've been calling this. You just check my my show, you'll see I was calling for this return back into this premium array weeks ago. And that's where it's hit. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. We're hit the premium array, and I put a post on my show here on the community tab that this was going to happen, just because it makes sense to me from this discount to premium array stuff happening that you practice on a 1 minute chart. You'll see it on a daily chart, hourly chart, 5 minute, doesn't matter. You'll see it on all those. I almost gave up on the 4 month. Glad I didn't. Oh yeah. There's so many times I was just down, depressed. I tell you, all the things he talks about in terms of how you feel, how you want to put your fist through the monitor. I'm so cheap. I wanted to punch my monitor, but I didn't want to buy a new one. So the cheap side of me was like, I'd gamble with my money doing the stupidest thing. And I'd paid for dozens and hundreds, probably hundreds of monitors over the time. I've never punched my fist through one like Michael has, but I have felt the rage, and I have felt the anxiety, the palpitations, all that stuff. Clearly not to Michael's extent, where he's been hospitalized for it. But yeah, all those emotions, all those things, been through it. I felt the pain. There was a time I was looking around my house, and I was checking my speakers to find out if he'd put a virus in my computer. That I thought, is he listening to me talk here? Like, I just said that out loud, or I was thinking that. Is he in my head? Like, how the hell does he know that? And like, I'd be taking a trade, and he'd be saying, "Don't take a trade here," and I'd be like, "Did you just watch me take that trade?" And he's like, "Don't take this trade," and I'll be like, "Oh, okay." I'll be like, "No, no, no. It looks like a good trade." And sure enough, it'd come against me. I'm like, I shouldn't have taken that trade. Yeah, he's good. He understands the psychology of, because he's lived it, right? He's lived it. Gamer rage. Yes, yes, Dal. It's definitely gamer rage. Yes, there's many times I've been in a kill of zombies. I love killing zombies. And I've had some games where you kill the zombie and it's just like you can't get past the level and you just want to put your fist through the screen, choke out that zombie. Like I could so kill that thing if I was there. See how we're breaking above this? Watch the next 6 seconds. Watch what happens. Wick does the damage, comes right off that rejection block there, snaps off of it. Look at that, right off there. And we're still below. Still below this one here. Am I in the right one there? Right there. Come on up here. "14 seconds. Watch the change of direction." 7, 6, 5. Right on it. See that? That's funny. Literally closes on that. Tell me that's not precise. Tell me that's not something, that's just all randomness. It's a key level we're watching. You want to see it react off there, and it literally closes right on it. Did we just happen to come across a bunch of candles and that level became a level of interest for us? Well, no, because it literally is the point at which, to me, the algorithm is going to say, I'm going long if I close above that, or I'm just coming back to do a little damage and then come back down into the range again. But I've got to close above that. Watch the next 10 seconds, see what's happening. And just watch it. If it closes above, it'll come back, tap it, or just start running right through these highs. There. See how we closed above it right there? See? Right above there. Tippy tappy. Now you're looking for it to go higher. And tippy tappy is a Michaelism. He may have said that once. Check the ICT index for a tippy tappy. If not, then it's not a Michael. He never said that. We'll catch you guys later. My wife giving me that look. Uh-oh. You got to go when the look comes. You got to get out of here, Jonas. You got to get out of here. That means either you have been making too much money, she wants more time with you, or you're making too much money, so she'd rather have, you're not making any money, she'd rather spend time with you. Yep. So right there, we saw the price change direction, came back, aimed for the highs. $12.30, 31, 32. This would be nice to see this run right up into here in the next minute or two, create a high, and then pull back in. What do we got? So 32 to 36, the old crazy Ivan, and go higher. Or crazy Ivan drop below here and start hammering through. If this ends up driving higher now and takes this inversion fair value gap, that was the overall objective for the day. So now we've got a change in direction. So now I'm back to looking at this high, that high, and back into that inversion now. If that's your higher time frame objective, right now it's being supported to going to the upside. And I'm going to keep going back and referencing this piece right here. We change the direction, support, push higher, look for these highs, and now you remain bullish until proven otherwise, until you get a reversal happening, till you see something like this happening on the other side, but a cleaner one. I don't like seeing all this chop on the side. I like to see a clean little, this, I don't like seeing that one either, but I like to see something sharp. Let me give you a nice sharp one here. It's up, it's down, displace, you come back into the order block, and then you go. You want to see something with just one or two candles in between that creates that so-called island reversal for these old school people. So Peter, yes, your lunchtime analogy has paid off. You have got what you were calling for lunch hour, taking this high out here. Find support off of this, keep going higher. I want to see a nice sharp displacement candle back down that says, hey, look, I've got some intentions here. I'm getting out of here. See this one? That's what I mean by displaced, come down. See the body's traded below it? But see, it's one candle. So I want to see this get below this because this could be a bear trap. I call that a bear trap. You want to see this candle get down below that candle on a close, then come back in anywhere inside this candle or this inversion here to go shorter. So I would, even though this is like right up into it, you got 1, 2, 3 different entries here. I'd want to see it get below this candle because it's all one, and that candle is connected to the inversion. This could continue pushing all the way through. There's the fill of the fair value gap there. And I snap it down. That's what you want to see. Here's the full fill of that one there. Boom. That would be the perfect entry for a short. If you're wrong and a body closes above it and your stop loss is here, so let's just pretend like we just took a short right there. And if we're wrong and you don't want to see this, a bear trap. Your stop loss will be sitting right here. This is that journal entering stuff that we started, I got caught on last week, was the bear trap. That's where your research comes in and you start to go, bear traps territory. And here you're about to get that stop taken. So if your stop loss is here, you'd be out right there. Or the mean threshold of that candle. You start trading through it, get out. If you're holding on, wait for a return back to this candle here. That'll give you your break even, opportunity at broke even. Or your stop loss gets taken. Because now you're going higher. Bear trap. That was a bear trap. What a chop. This is terrible price action today. This is just cheese crater. I got stopped out at 1207. 1207. Not a nice little This isn't nice. Eesh. Look at that mess. That's like sandpaper. It's so rough right there. That's like 60 grit right there. This really didn't give us much today. What's oil up to? So inside this range here, see how the body breaks below the low right there of that fair value gap? Trade back up inside it. There's 1, 2, 3. So you would have got the second one and the third one, or the first one and second one. Third one you don't get. Aiming for first low, fair value gap, order block. Or if you're a cam model people, your cam model 1 retest right here. So the bodies of the candles respect cam model 1. Hit it and leave. If you're just waiting for a cam model, you would have waited all the way down into here. You're into a good discount portion of that range now to run higher. And if you go from discount to premium again, runs all the way back up and through it, going higher to rejection block. You don't get your highs. Pay yourself at rejection blocks, because if you didn't, you're getting squeezed all the way down here because you thought that high was going to get taken. Always pay yourself right there, because the distance between there and there, it may be small, but the likelihood of always taking out those highs are not always guaranteed. Yes. Aussie D. It's Monday. Back to the rejection block here. Relative equal highs again. See if we get support here, or if this just sinks through the mud and we pop out the other side. And then you look at the larger range that you're in, from here to here, and look at the 3 different main PD arrays you're looking for. This would be more of the equilibrium of that larger range. Inside this one here, you have a premium level, a discount level, and there's that one there that makes me curious. So we start to eat through this, find some support. It's a change in direction again. We broke structure with a body, but the wick took out that high. Now I want to see this provide support, push higher, or break through, come back, find support, and start working inside this range here. It's definitely one since October last year. LOL, I had lost so much money before she thought I was gambling. Yeah, that's where you got to watch. Are you gambling, or are you truly following your setup? And believe me, I might as well have had a set of dice next to the table and just rolled everything. I chased price, literally, like, oh, that candle, oh, I'm wrong. I'm going to go on that way now. Oh, I'm wrong. I started off literally chasing candles. And it was gambling. And then the rush you get, you're literally trading on emotion. Nothing skill, 0 skill, just emotion. Watch this 7 seconds now. This could be the new change in direction. 3, 2, 1. There you go. You close below. Now you're going down and deeper into this range. Look for the rejection block here. This is the small range you're in right now. And then you want to, as soon as you start clearing this one out, look for the next next one and the next one. So look right here. I'll put the line on there. Holy smokes. We jumped 20 people today. Welcome, 20 new people. Body traded above it. See if this one go lower. You think it's going to come lower? Did not come lower. Broke through. Now you're back to bullish again. You're stuck inside this guy here. Boom, boom. So watch this. And you think what above here would support price to go higher? We return to that order block right there. See that? Capture the red on the bottom of it. Now push through here and get below here, or mean threshold of this candle here, because we validated it with that wick. So if we bounce off this point right here and go higher, right there. See how it freezes on it for a second? Wait, react off of it, go higher. And if we come below this again, and we're back to there. Find support off of here. Stay on the horse here. Which way are we going, up or down? I want to see this provide a level of support. Now continue going higher. And if we lose that, we trade below this, we're going shorter again. We just came back up inside this small range here to get premium level. Yeah, I'm going shorter, I think now. Now, it could sound like a lot of waffling, like, oh yeah, you can easily guess up and down when you're in these tight little environments like this. But it is really a high resistance. But if you want to stay on where the price is going, keep these fair value gaps that become inversions as your hallmark for higher or lower prices based on where they close. They're the points in which it'll say I'm going higher or I'm going lower, and otherwise I'm just going to bounce around inside this thing until I get a displacement candle that says where you really want to go. Right now it's like marking time, like Michael says, during a lunch hour, just going back and forth, reaching for the little tiny ranges that it's in, extend it up a little bit, come back down. It's still working premium and discount arrays. but you want to see it get, you want to stay on it. Watch where it closes. None of the decisions you're making inside this will determine whether you'll enter into a trade anyway. This is just staying on price action. If you saw this on a daily chart, you'd be like, I'm not touching this. I'm going to move to the sidelines or wait till next week and see if there's anything better. Or wait for tomorrow, see if there's a displacement candle. This is one of those things you just go, You get to see it on a daily chart or on a 1 minute chart now. See how we traded below it? Now you're looking to go low. Changing direction. Gonna go higher? Nope, gonna go lower. Gonna go higher, lower, higher, lower. We still got another 12 minutes for lunch hour. So we want to see a 1 o'clock zipper right up into here. Clean that out and then start heading back down south. The reversal right here, there's that little fair value gap. Body breaks below it, come back up inside it right here. You find support. You found support one more time right there, and we're still going short. So if you're trading some silly thing like this, if this was a daily chart and you're trading off of this inversion, this swing point here above this old high, you see that you get short, you're aiming for your order block, your rejection block, divide your wick if you're into the wick stuff, the lows, and then the bigger range that you're in. So there's your reversal for the swinging for the downside. I just noticed that now. This confirmation, when it came all the way back up here, just came right back up to that fair value gap. I was calling this order block, but it's actually this fair value gap fill again. I'll just draw it out here so you guys can see it. Right there. Oops. Look at that, right into it. Once we had a body break below it, we never had a body break above it to continue to the upside. It's the premium array inside that range, right? So if you don't break above it, then you're going higher. All the time you're wicking in it. Wicks do the damage, pushing for lower prices. And my live trade got squeezed, but I didn't get my stop taken yet. I've got a stop that's way up here somewhere. Kill zone time, temper your expectations today with high impact news tomorrow and Wednesday. Yes. Here's the macro starting now. Traded above. Look at this piece right here. Okay, I'm gonna go for P. So you'll see it suddenly take off now that I'm leaving. This one's for you, Abs. Didn't really do a lot of running around while I was gone. How do you enjoy your high resistance liquidity runs, folks? Not a fun place to be, hey? Yes, we need the carrot. Michael did not get to see the carrot. So he understands what the algorithm is truly driven by. Below this one. Imbalance, a little imbalances here. See what kind of reaction you get off of this. That one there. Now kick off of that, come back down. What time is it? 55. Before 55. And we're just starting 10 seconds left. $58. 2 more minutes. Where are you calling, Derek? Where are you calling, Abs? Where do you think it's going to go? It's really in cheese grater territory here. I was surprised Michael didn't know about the ICT index. I thought somebody would have brought that to his attention a long time ago. So looking for 58 to make a move here. And then if not 58, 00. Well, 0. 50-50, not good. Agree with you, Abs. Yeah. down, but I wouldn't trade NQ now if you paid me. It's been consolidating on the new week opening gap. My play is waiting for 1030 buy side to be taken, and if we're headed lower for Michael's target. I was also shocked. Couldn't believe he wasn't aware of it. Yeah. Well, it's nice to know we've made him aware of it. He got it here first, folks. He got it here first. There you have it, the 00. And away we go. Come for the carrot, my friends. Come for the carrot, my friends. And away we go. It's going to slam through it. It's going to slam through it. It's going to stab the carrot. Someone's pulling back the spring. The elastic band is being pulled back. They're going to stab the carrot. Double zero. Get a 1, 2. Then look for a 2. Double zero. And did it come back to an area, that 00, did it come back into a discount array? It came into a discount array. If the 2 and the 7 do the same, look for lower prices, and we want to see it get below here now. Want to see it stab through the carrot, get below here, and a 2 and a 7 get below there. Here's a 1, and here's the 2. Return into here, create the high here. I want to see the high get created here, not a low here. Otherwise, we have to wait for the 7 to bring us back here. "30 seconds. That's good. That validates this. 2 seconds. Oof, right on it. 3, so we have to wait for 7 now. Come and stab my carrot. 2, 7 would be a reversal into this. Stab the carrot. Keep coming. Keep coming. Going to bring us up. Come on up. That'd be great if it held here, though. Just keep coming down. Give us our intentions coming lower now. Right off this guy here. get through this and this. I'll put the carrot right on the 4. 3 minutes. I want to see this start getting through here now. Some big bold candles. Big bold candles. That's what we want to see. If you ever switch to Discord, I have a Discord channel. You're the second person to ask me about the Discord channel. Well, to transfer over to that. I might do a private shtick on there. Yeah, that's what we're looking for. Carry on, my wayward son. There'll be peace when you are done. Driving on down. I'm so glad I'm still in this live. Ooh, 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 yeah. I've been weathering this whole crap. I have a bot you're welcome to use. It integrates with ICT Index, so you can ask the questions right in the chat. Nothing fancy, just a fun little oh, neat. Good for you, Tristan. He's a little genius, this guy. Tristan, those of you who are in our Telegram channel have access to the magic numbers that Tristan took the numbers I gave you guys for the magic numbers for swing points. And he actually created an index or an indicator for it. So there's a couple little tweaks I like to see on it, but there's it covers it pretty much the basic numbers. I added I think there was one that I either didn't tell you or wasn't mentioned in my discussion with you, but there's one or two more in there that I'll get you to plug in. I think I added them in my version of it. That's a 7. Then you look for a key level. So that would be like a pay yourself right there. That's the 52. That's that first one we talked about on the 4-hour chart. That objective's finally been hit. Right there. Top of the fair value gap. Those two runs have been taken now. Right? So that would have been the first objective to aim for. And right at the 7 on the index, on the magic numbers I was telling you about, there's your objective, if that's what you're aiming for, and you're aiming for on a 7, you're out right there. Then now you got the squabblers. The squabblers are next. And you want this, I think, Tristan, what I was looking for is something that marks, because sometimes you can have a top and a bottom marked with the same candle. Like if this wick came all the way down to here, it would mark a swing point low here and a swing point low there, or high there. So you'd have to mark above and below. But there's your 7. So this could be just a swing point right now for a 9, 10, 11, 12. So you've got all those that can happen inside here. And the 9, 10, 11, 12, the squabblers are basically the, one of those will set the high if I'm looking for a retracement back into here. So looking for an order block in here. So now we're starting that 9, 10, 11, 12. No, there's no video on it. It's just I'm kind of describing it as I go. It's not an ICT thing. It's more of my discovery from bots I'd made in the past and discovered. So Tristan's been nice enough to make a indicator for me, and I'll kind of teach you guys how to use it as we go. So if you have it, you can thank Tristan for that. So the squabblers, see how this one here is set a high here? See what that dot sitting up there? If this one closes, then that's the dot, not that one. It should be right there. So it sets the high or the low, right? So here's the squabbler, here's the 10. Oh, he wants the carrot to go further now. Now we really want Michael's lows at 18.1 to 10. You want these lows here taken out now at 18.230. 18.230, so they're sitting right in here. And it's a private indicator. It's not one that's actually out for mass people. So you need to subscribe to our little channel and pop into Telegram there, and you'll see, you'll have an opportunity to see it there. See how 9, 10, 11, 12, I call them the squabblers, because they're squabbling for who's going to make the high or the low. So the 9 makes the high here, 10 makes the low, 11 makes the high, 12 could make a high or a low. Then it'll start to leave. So we're coming back into this fair value gap here again. So you want to see this 11 keep the high unless 12 pushes up, makes the high here, and then continues pushing down. You don't want to see this get taken out to the upside. Otherwise, you got a swing point here. And now you've got further upside inside this range here to explore, which I don't want to see. Just this tap in here would be nice. And I want to see this just start booking down now. This especially would be nice if we close below here, come back in, find some support at it. Okay, so 12 make the squabbler. See, they're all trying to make who's going to make the high or the low. This indicator is really good for time and price. So time and price. It'll give you your precision of what you're expecting on a specific candle. So if this one did not take out that low, you start to go, I'm looking for 7 to take out my low, and 7 takes your low. Then you got the squabblers. So this is where we can go sideways for a while. It's not a Michael thing. Squabblers is more my thing. This whole time thing, this little piece, is just something I was playing with for a long time. And I'm sharing it with you guys for free. I don't care. And you got someone like Tristan who can program. Man, that's awesome. There's so many ideas I have for you, Tristan. Keep you busy forever. Especially if you can trade them, or you can do this all in Pine script. Makes a high, and then this one's 14 makes a high. So now we're looking at, I don't like this idea at all, because now we're starting to look for a run back up. I suppose we could get in here. This can be one of those nasty retraces. 50% of the range. So you got the next ones are 16, 17, 18. And 16, 17, 18 are very similar to like the squabblers. You can get the reversal, 16, then 17, then 18 and 19, and then 21 usually sets a higher or low and then continues on for the rest of the the rest of the run down into the 30s, the 27, 30, 32. Now, if you pull this whole range from here to here, $50 will put us on a 16 candle. Yeah. See how it found support at this? Going higher. Going higher. 62%. See, now if you got in here because you saw this break here and you got in there, you pay yourself there. You're going to pay yourself up here. There's the 16. Right back into a premium array. Now you want to see 17, 18 start to come back down here now. And there's so much more I can share with you with these times and how crucial time is. Golf course. All right, Derek. See you later, buddy. Ah, yes. Forgot about the double swings. I only have Discord. I have to mark on my I haven't used Discord a heck of a lot. I do have a Discord account, but that might be something to explore sometime. So 16, 17, now 18 is usually a reversal candle. Wherever 17 went, usually get 18 or reverse that. Like the squabblers, 16, 17, 18, and 19 like to argue over who's going to make the high, and they'll go back and forth. And if they can't decide, then 21 will set the mark. I like the way you've got it set, Tristan, so that wherever the direction is going, it marks based on the direction it was going at the close. I like that idea. Because the majority of the time it kind of sets up true. So if you got in on this here, move yourself to break even on 50%. As soon as it hits 60%, you move to 50. As soon as it hits 70%, which is pretty close to that, you'd move up to 62%. So it doesn't quite hit 70 yet. Now we'll wait for 21. If it's not 21, look for 27. The whole purpose of it is not so much to catch the perfect high as to find out at that specific time, is it hitting a specific array that you're interested in to get short on or whatever. You got in on that reversal. Did you use this right here as the candle to get short on or get long on? Or did you take it in here somewhere off this? Oh, that's the perfect silver bullet entry from 10 o'clock or from 1 o'clock. Look at that. Silver bullet. And it's at 10, 11, 12. That's the setup. You come in 13 and off you go. Nice. Excellent eye, Derek or Dave. Well done, man. Good for you. There's 21. Now you got to ask yourself, are we running for the highs now? Now we've run the lows out. These equal liquidity above the market here would be a great place to hunt on that before slamming down. Found support above here. See how we're just still climbing on top of these? Going higher. Are you still in this, Dave? So if you're in on this silver bullet entry here for a long, right on a macro time, the end of the macro, that was a beautiful macro from 50. Look at that. Body trades below it. Come right back into that order block breaker right there. Right on 001, return, and then hammer down to 7. Right on macro time too. So using a macro plus time and price, these are the things I'm still working on. So now you're waiting for 27, 30, 32. got in the reversal on my nugget. That's what I did. Good for you, Dave. Consolidation, cam model 1, 2, and whatever that leg is that takes out that there is 50%. If you close above 50% of that leg, then you're then you're on the wrong side of it. Let's look at this. I want to see if that was 2 or 2.5 standard deviations from that low to that high. Projecting down 4. You would have had 4 on that. Nice. You would have 4 standard deviations from that leg that takes out those highs for a run down to take out that low on a 7. Oh, nice. I didn't see it till now. I'm just looking at, I can see these things after the fact a lot of times, but we got a cam model 1 going on here. Consolidate. Wait for 27, 30, 32. Set a high. That'd be neat to see those, see them leave this intact for later on in the week. But it seems to me like they're going to run. See how we ran all the way to the bottom of that 4-hour fair value gap we were calling earlier? See that? Right to the bottom. These are still intact, and so are these. So when you see these kind of key areas hit, then you look for that reversal. And in Dave's case, he got a nice, beautiful silver bullet entry at time, price. He caught all of it at perfect time and price. So well done, David. Did you use your fib tool to get out of your trade, Dave? How do you see it before it happens? Well, yeah, you just got to read it enough times and you'll start to see what it is you're expecting the next candle to do and what you want to see, how you want to see it set up. If it takes these lows out, you're looking for this specific setup. So you're looking for a reversal to happen. This is that imbalance thing I was talking about when I was over here somewhere. Over here. Remember when I was talking about seeing it go up, there was that curious spot that I wasn't sure about that we got level off of. Same kind of thing happening here. Body breaks above it right here. You trade back to it right there. Tap it, and away you go. That's what you want to see. You want to see it just hit it and get out of there. Or in this case, you have at 10 o'clock or at 1 o'clock, you have a silver bullet at 1 o'clock. That's how you anticipate the end of your macro at 10. Remember, from 1250 to 110, that's where your macro finishes. And then you have a silver bullet entry. That's why I wait for that wick to form on the hour. See, that's the bottom of the hour. If you're looking at the bottom of the hour, it's taking out a low. Look for a reversal to happen. Wait for your setup to happen. And as in Dave's case, he saw this, saw it right there and went, I'm getting in on that. The moment it starts breaking into this fair value gap here, I've already taken those lows, so I'm expecting a run back into this range. And he took it long. Stop loss would go down here, and as soon as it starts breaking 50%, 62%, if he used his fib tool to get out, he could have pulled from that first high here. Ignore this thing. These are terrible colors. Oh, that's equilibrium, sorry. So from here, as soon as he got in on this candle here, hits 50, moves the stop loss up to here. And this is how you kind of work this stop loss thing, just so you get an idea. So the stop loss was down here. It hits 50%. He moves his stop into break even. Let's say he entered in right here. So he takes 50% of his trade off there. And as soon as it hits 60%, which is right there, watch. He moves to 50, takes off a portion right here. Then it goes to 70%. So he moves to 62. Notice it doesn't come down and get him. So he pays himself at 70. Then it hits 75% on this candle here, on this run up. Well, that one there, it ran up. He's at 60. Opens here, runs up to 75 now. Also, I know this would have ran up to 75, so he would have paid himself right up to there. Another portion out there. And as soon as it came back and tagged him, he'd be out right there. So he's got from here at 59 to 80. He's got 20 handles for the 20% of his trade. He got 50% off there, another 10% off there, and another 10% there, another 10% there. So when he had like 20% left, and it came back and took him out here. So if this rolls over and comes back down now, he's made a nice little chunk of change on a reversal inside here. And if you're expecting Michael's lows to get hit, then you're back to an optimum trade entry to continue lower. So he did a really good reversal counter trend trade there. If you're looking at Michael's lows as the trend run for the day. So well done, Dave. Did you use the that fib tool to get out with, Dave? Or did you have a different technique you used? There's multiple ways you can manage that in the back end, by the way. There's 26, 27. There's the 27. 30 sets a high, so that would be up there. You see a little swing point. Swing point. That one there's not. Swing. You don't want to go into a crazy Ivan now. So you get down to 36 to 38, then turn around and book it right back up again. I want to see some big significant candles here now. There's a little pop down, change in direction, pop back up, find support at it. Now we're looking for a downside. Come back into your consolidation. All the way up to the bodies is fine. Wicks are even better. 50%, closes above 50%, or again above here. Wait, your CAM model 2 is going to fail. Are you still in there, Dave? I can't believe how well we're doing today. We've we've gained like 30 people today. This is awesome. Welcome all you new people. Welcome, welcome. It's amazing. 30 people in a day. That's pretty good. We haven't had runs like that in a long time. Welcome all you new people. So Dave, did you actually use your fib tool to pull out on that run up? Or did you just seek the first order block up here? Or how did you manage? I'm interested to know how you manage this silver bullet entry here. You just need to read the tape and you'll see opportunities. Yes, indeed. I agree with you. That was a market maker buy profile. You want to see that provide support there now? And where are we sitting? 36. So this is the crazy Ivan here. And it's not an ICT thing. It's as if you've been here a while, because we got so many new people in here, the crazy Ivan is, remember from Hunt for Red October when they're hunting for that Russian sub, and then at the bottom of the hour it does a crazy Ivan and does a look back to see if anybody else is following it. This is the crazy Ivan, the bottom of the hour. You get this crazy Ivan look back, and then either it'll come back and get you. It'll either come back and get you, or it will check, nothing's behind it, good, and it will continue going forward for the next price leg up higher. But if it crazy Ivan sees you, it's coming for you. So we want this to provide a level of support here now. Now, because if we start taking out these lows here, you start looking at this and you go, put your eyes right here and say to yourself, if it breaks this high, this little fair value gap here, and this fair value gap, look for the support to go higher. So for the crazy Ivan to continue on, you want to see it get above here. And if it doesn't, then we'll just carry on. That'll keep coming on down. See, we've got these lows taken out now. And we're sitting coming up for 38. I don't know if this is one that you had marked in yours, Tristan. We'll see if this one pops in here. I think I added this one in after the fact. Yeah, there's this 38. And you'll start to realize that these highs and lows are important in terms of what they're reaching for at that specific time. You can expect a reversal to happen when it's hit a specific set of PD arrays, or it's a candle that will start to reverse or change the direction. It may not make the high, but it will start the change in the direction. So here's this taking out these lows here. And they're good because they mark this a swing point. So now you got 40, 42s next. You just want to see this keep augering down now like crazy. So 38 was the reversal candle. Doesn't mark a low, it just marks a reversal candle. So it's a specific time that marks a high, a swing point, or the start of a reversal. just something I've noticed, and I've been studying that stuff for years. So it's not 100% by any stretch, but you start tying it in with specific PD arrays and Michael's principles that he's been teaching us over and over again, you'll start to see some precision on how you can use these times and price with his PD arrays to start saying, okay, I think in the next few minutes, we should have a nice little swing point hitting over here or whatever, right? So there's your 38. There's your 40, 42. Looking for a discount array now. So if you're looking for a 40, 42 to get you somewhere where it's 50% of the range, you're just inside now, down here. Order block, come back up to this. You can get short right there off that order block. Now I don't want to see it get above here. Got a little late on that, but anyway, 40, 42, back to this order block here. Could be anywhere inside there. I still want to see it go back up above here. And this one here, we'll be putting a dot down here as well, because it's a high and it's also a low. That gets taken out, then that's not the high anymore. It's coming back to that dot again. Line up your dots. The next one will be 42. Yes, sir. Fibbed it. Oh, good for you. Love the way you explain. Oh, you're welcome. Price also stalled. So I closed. Yeah, nothing wrong with that, man. Nothing wrong with that. I am new. Just found you today. Excellent stuff. I blow accounts and it's kind of chopped. Looks like this will help. Yeah, you when you're in this kind of chop, you really want to be super careful about entering in. And it's not about really entering into a trade here. It's about looking at reading the price action and staying on the horse. All the time you can practice reading on a 1 minute chart how to stay on price, and then when you see it change direction, you'll see why it changes direction right here. It was going long, then, oh, no, I'm changing direction. I'm giving you an opportunity to get in short here. Guess what? I'm going to give you a couple more chances, then I'm out of here. So the algorithm kind of lets you know, okay, I'm giving you an opportunity, and I'm going to run the highs. Boop, run up, just ran out the highs here, back into whatever you want to say, that specific candle you're looking for to make that high at that specific time. Why 27? Why was that 27? Yeah. There's reasons for it. Obviously, it's a area of sensitivity. I tell you, it's algorithmic, and I can tell you, I can extrapolate this onto many different things. We're just playing on a 1 minute. Tune in. I'll show you how to use it on an hourly chart. I'll show you how to use it on daily charts. And it's not just all these numbers, by the way. It's some different ones, but you'll see it's super fun. Anyway. Swing point, back to an obviously logical level. Order block that initiates it, fair value gap, body drops below it right here. Are we getting into, there's a candle that separates it, so you can take that as the short, back to there. There's your ideal entry right there for a short, and that's your reversal. Inside the range, look for 50%, pull your fib tool. If you're in this short, You pay yourself at 50%, 62%. The same thing Dave did on the way up. You can do this on the way down now. Dave, did you catch this on the way down? I know you did. I know you did, you steely-eyed missile man. I know you did. You saw it. Next one's 45. Yeah, the dots represent a specific time. It's my own analysis on time and how precise time is. And I developed these bots that went back in time and found specific key points. And I've been fortunate enough to meet up with a fella called Tristan, who's been able to program this into PineScript and create a indicator for me. And for you guys, it's in there. It's not in, and it's not published in the main charts. It's just something you can pick up if you join our Instagram or our Telegram, I should say, and you'll have access to it in there. It's not a published one that you can find up on indicators up top there. And just downloading it without knowing what it's for will frustrate you. It's just more shit on your chart that you're not going to know what you're doing with. So just watch it for a while. And if you're interested in using it, because we're still trying to suss out the pros and cons of it. This is good because it's a visual reminder of me about time. And I haven't used it in a while. So it's a good visual reference. So I appreciate Tristan doing that for us. Yeah, the link in the Telegram is above. It's up in the bio section there. It'll have 4 different links. Just click in there. There's a Telegram link. You can pop in there. So you can see how when you're going to go for, if you're aiming for these PD rays that are outside your reach. So if you start saying, oh, it's definitely going here. And then you see this happening. You go, no, it's not definitely going there. It's changed its direction. And right now it's just coming back inside our range. It may definitely reach for that eventually, but right now it's not. Right now it's pulling back into a retracement. And we won't know that it's going in that direction until we get a break in structure or a change in direction based on these fair value gaps. That's how I use fair value gaps and inversions to tell me about what direction we're heading in. And now my dots are another indicator of direction and time and price. And over time, you'll see me, I'll use these more and more, and you'll get to see what it is that, how they can help you and how they can, or they might just hinder you. You might just see too many dots on the page and makes your chart all messy and you don't want to use them. I'm okay with that too. 58 likes today. Holy smokes. Did you see that? We have 58 likes. I haven't had that many likes on my chart in a long time. And 60 people in here right now. Welcome, 60 people. That's like stuffing you all in my kitchen. This is awesome. My kitchen's not that big. 60 people would be a house party. But welcome, everybody. You're all welcome. Pop in. And rude or inappropriate in here, you're gone. If you come into Telegram and you're rude, inappropriate, you're gone. Just be nice. We're all about sharing and being caring and helping each other out here. That's what the whole community is based on. Glenn Powell, join the group. Welcome, Glenn. Welcome. Welcome to Telegram. And Telegrams are where we usually go at the end of the day. When the session's over, we tend to go there, and you'll see people like Super Dave there doing some trades. Tommy and Derek. You can see Derek there. Derek will also send a link in the afternoon. He likes to do the end of the day, the close of the end of the day macro. So you can catch a link there if you want to see him talk about the end of the day macro as well. I'm looking at this guy. I haven't got him lined up, but see how he's just kind of coming down, tap, tap, tap. We're not quite into 50% of that range yet. This is that whole like array to like array. I like this thing down in here. Remember, I was curious about this over here. Now I'm curious about this one. I want to see this one give way on the downside, and then we're back into running these lows again. We're coming for the carrot. Let's put the carrot down here at 50%. That's the secret to the algorithm right there, folks. It's a vegetarian. The algorithm is vegan. It's not a meat eater, like you might think. Oh yeah, so premium and discount arrays. So we got like array to like array is this guy here. So premium, discount, or here, discount, premium. That would be the inevitable goal when you're inside this range. If you're paying yourself at 50, 62%, so on and so forth. This one is below the 50, so that would be the discount array, inevitably where you want to aim for. So we're kind of stuck inside this one right now. So if you break above it, you're inside this range now. So you're going bullish inside this range. So you're going from here to this guy back in here. You'd have to pull your fib tool from there into there and see where you're running back, because you'll always see this running from premium to discount over and over again inside the smaller ranges that you're playing inside, right? So if you see this from here to here, it retraced all the way back up to 62% or an optimum trade entry inside this little range. It traced all the way up there and then extended the range further. Then it traded all the way back up into 50% of that range before extending further, or a little over 50%. You pull your fib tool there, you'll see it constantly keeps looking for liquidity, run back up to 50%, come back down to the discount again, run back up into premium, back into discount, run back up to premium, back down into discount one more time before extending the range. All these wicks play a role inside a smaller range. You just take your fib tool and mark it out, you'll see. And that's what we're trying to do. We're just trying to stay inside price action so that it doesn't throw us off the horse. The more you can stay on the price action inside a 1 minute chart, the better you're going to be at spotting biases, the better you're going to be at spotting higher time frame ranges. Because if this was a daily range right now, would you be playing in it? Hell no. But if this consolidation, you suddenly see a displacement candle to the upside, come back, find support at it as a cam model 1, then you say, right, for the next 2 days, I'm heading back up to here, or next few minutes, I'm heading back up there based on this level right here. So do I get on top of it, find support at it in a consolidation? Cam model 1, cam model 2, all the way back up into a higher range. So here's your displacement candle. You want to see a body get up there, not a wick. And there's a little tiny fair value gap up here. and this premium array inside this range here. You want to get a body above here, 23 seconds. If not, just a wick run and then a slam down. We're going to see a unicorn run today. I can see it already. No body, just a wick. You want a body up there. If you're a wick person, be a wick person. I'm a body person. I have to see a body break a high, not just a wick. Body gives me more confirmation. And this is a, what is this, a 55? $55 is a pivot or reversal candle. Usually. And then 58 will be a pivot reversal. Helix Digital, I'm new to ICT. Well, Helix, welcome. If you're new to ICT, go to his core content. I thoroughly encourage you to go to all his core content and start with season 1, episode 1, chapter 1 of your ICT journey. Don't go paying for it from somebody else. Stay entirely in the free stuff that he's got. Learn it. Come here. We'll show you how we're applying it on a 1-minute chart, how to read it. But go there and learn from the horse himself. Use the ictindex.io to ask any questions, and it's an AI that will literally direct you to all ICT stuff. Any questions you have, go there, type it in, and it will give you exactly what you're looking for. It's an amazing piece of a kit to add to your toolbox, and it should definitely be in your toolbox. So definitely study ICT. Don't pay for it anywhere. Come here. Everything's free here. Everything's free from what ICT teaches. There's no reason you should be paying anybody for any of this stuff. And if it works for us and we're giving it away for free, then it'll work for you. It amazes me how people, they want to charge you for something like that. And you go, why? If it works for you and you're making money at it, give it away for free. Not going to change how you make money. Now I get some people just say, look, ICT is not doing any mentorships anymore. Could you teach me on a 1-to-1? I get that. I get people want to do that. You want to pay them, and you don't want to do the studying yourself. You want somebody to kind of hold your hand through the whole thing. There's lots of people out there willing to take your money. Lots of people out there. There's tons of us out there that are doing it for free, though. I wouldn't want to be anywhere else, Darren. Thanks, Tommy, buddy. Can you drop the link for your trade Telegram? Yeah, it's above. Go into the bio above. I'm not going to just keep sharing links that are already up there. So dig in there. You'll find it. For a vegan, it has taken a bite out of my a few times, says Duke. Yes, indeed, it has. So now see how with the bodies traded above this, now we've got change in direction, right? With all this down here did not get taken out on the sell side. So sorry, I should put my carrot off to the side here. This sell side, we did not get a body break there to confirm we got further continuation on the sell side. You had body break above this, said all we've done is reclaim this fair value gap in here multiple times. It's not an inversion because we haven't traded through it and back into it. We've just wicked through it. The bodies have respected it. We traded back up above it, found support at it, and we're pushing higher. So you're back inside this range again now. And we're coming back into that little pocket we talked about up here. And I'm going to put my stop loss right up there. Because if it runs me out, it runs me out. That should pretty much cover all that I made today. And I'm still in my live, so. See how you look at premium and discount, like array to like array? You have a consolidation here and a consolidation here. You run from one consolidation, body finally breaks above it here, one consolidation to the next. You're always trading. When I look at consolidations, you can trade from one set to the next set. It's that range in between is where you're getting, that's your low hanging fruit between one set and the next set. So if you just trade that real quick, I don't know if you're into 10 handles or so. That's not even 10 handles. It's more like 7 handles. So now we've just come up to the bottom of that premium array inside this range, discount, premium. So you just touch the premium, ran through this. There's a little fair value gap there. It's a good sign. You want to see that close a body below here now. It's 2 candles separated. So yeah, you could look at this. There's nice. That's good. Just ran back up into, so look at your fib tool here. Get the idea of what we're doing here. When you talk about these little ranges, you got to watch for these retracements back into the ranges, right? 62% retracement back into here. Optimum trade entry for a short. You hear him say this all the time, and it was a premium array, like array to like array, right? You went from this consolidation up into a premium array, which is that consolidation all the way back through here. It was set. Or you could just look at this right here. We'll just pull this through here and see if this one lines up for us. Because I don't want you to think I'm just form fitting this shit. So I want you to see how it actually works. So there's your, right, there's our reversal. There's the reversal we're looking for. We want to trade below it, come back inside it to get short, right? We trade back up inside it again, and you're short. And if you're new, and you'll learn about buffering later, how you trade this to a discount array, which we didn't get 50%, so you wouldn't have got that. Trade to 50% or fill of a fair value gap, it comes back up. What you took off here, load back on there. Again, start your trade all over again. Stop loss is sitting up here. Start your trade, and now we want to really see it get some legs here. Give me some carrot now. Yeah, I usually start off the day. Who's that? Manny Fred or Manny Freddy? Yeah, I look at the higher time frame to get a bias for the day, and then you go down to the hourly because you can use that candle timer. This number thing becomes important in an hourly chart, and get a bias. And we were looking for the 4 hour. The equal lows this morning. It ran those out right into that 4 hour fair value gap low. Look for a reversal. As soon as it takes these lows out, look for a reversal back into the range. And that would have been this one here that Dave caught. And then you look for, and if there's multiple ways you can manage it. So if you catch this reversal and you wait for the next reversal to go in the opposite direction to get out, you could trade that up using the fib tool to go all the way back up. Or as soon as you see this reversal happen right there, then you go, I'm out right there. Now I can go short because now I've got the reversal going in short for, again, 50%. Pull your fib tool, manage your stop losses or your BISIs, pay yourself at BISIs, pay yourself at all those, whatever your method is for managing it, or you wait for the next reversal to happen. There's nothing in here, nothing in here. There's a deep retracement back up to you one more time, and now you get short. So until you see something like this low get taken, you see this right here. If we have a body trade above this and go higher, to me, it has to get above this one because we're inside this range. And it's important you guys see this because you have to know which one to look for. We have a discount one and you have a premium one. Inside this range, you have to blow the premium one out on the upside to go higher. This one could be a small little reversal. You have to take that candle out. So to me, you have to close above this one. It's a premium to go higher. Otherwise, we're just getting a quick retracement back into a higher time frame breaker. That's a breaker. Broke this low. You trade it back to it right here. Imbalance right there. Perfect fill of your imbalance. Go shorter. Now you want to stay below this. You don't want to see it get above here now. I'm going to put this one here and that one there. And there's that one there. So there's inside this range, we have a discount array and a premium array. And when you have two different, and I say array, I just say they're premium SIBI and a discount SIBI. Sorry, someone's calling me here. Let me just double check this. Hello? Hello, honey. My wife's like, Michael was in on your show today? It's like, yeah, he was. Because tell me about it. And I was like, okay, I'm still on the show. Anyway, yeah, so when you're looking at a SIBI above and a SIBI below, you have to break the SIBI above for me to go higher. Otherwise, this could be just a deep retracement back into this order block before finally, or deeper into this breaker here before finally giving up the ghost and going back down again. So I kind of let the first one go, give it some wiggle room back into your range, because look where you're, watch right here. See, we're 50%. We're just hit the edge of the 50% right here. Wick up in there, that's fine. I'll turn around and come back down. That would be super strong for me. Otherwise, we have to wait till the upper one, which is 62% and higher. So I like these wicks getting rejected off there. That's a nice sign for me. And now we've got an important candle, number 7 candle. Sorry, this nice bash your ears. Greg Taylor, I can't find any link. What link are you looking for? Go right in here where it says more links, and Telegram, go right there. Just click there and that's where you'll find it. Right under more links, right there. You think we get to the 5-minute fair value gap in a premium? That hasn't been tapped. 5-minute fair value gap. Okay, so what I see in the 5-minute chart is kind of interesting. It's conflicting with what I'm seeing on a 1-minute chart. Here's why. You see this, how we've taken out these lows here, and you have this right here is the reversal. Body trades above it. You come back inside it, all the way down to here. Perfect fill to go long. Right? Perfect fill. So what I need is for, if I want to go short, and we want to get back to Michael's prediction today, then this has to get taken out on a close. Come back inside it and continue going back lower. If this now supports going higher, then we're looking for, where's a like array? Holy crap. Maybe this one. No, one right here. There's a swing here. Reprice. This is this imbalance right here. I would probably say it's not a clean one for sure. Sorry. Not a clean one for sure. Otherwise, it's way up here. We could take out these highs here. If we lose the mean threshold of this candle right here on a close, and you take this, and yeah, just the mean threshold of this candle here on a close, 5 minute, look for higher prices, and then watch it eat through that. And if it eats through these two highs here on a close and a body close, and it comes back and taps this, then you're longer. But I want to see this degrade through here and a body close below here in the next 5 minutes. I want to see just this return to this order block. So order block validated right there, come back, find support, keep pushing through here on the 5 minute. Otherwise, this reversal, that's your perfect entry, because if it trades below it, comes back up to it, that's your opportunity to break even so that you can continue heading down. But if you're going long, then you're that's the perfect entry you got 15 minutes ago, 5, 10, 12 minutes ago, whatever, right there. That was the perfect entry to go long. So I would have and your stop loss is supposed to sit here. But as soon as the body hits below that, use your fail safe to get out of there. And if you don't know what the fail safe is, it's in the videos. In my videos, it's not a Michael thing, it's more of mine, how to protect yourself. You should have two different types of stop losses. One is your main stop loss, which you risk 1% or whatever your total is you're risking for this account is risked right there, right? That's your 1%, 2%, whatever, 1/4%. And if you're wrong, that low is they're heading for that low. It's also the mean threshold of this down close candle right there. If it trades below it, oops, I failed with that. If it trades below it, then you're on the wrong side and you're going to head down lower. This is what you want to see. Those of you who got in on that one right there, you want to see it close above here. So my stop loss would be up to break even. I'm watching this right now on a 5 minute, just because you're it's contrary to what Michael was saying. And you're looking for, on the daily bias, if you're still looking for those consequent encroachment or the mean threshold of the daily fair value gap that we mentioned earlier, then you're in a trade that's supposedly going higher. Just keep your eye on that. You want to see this give way here now, push through hard. And you got 3 more minutes and you want to really see that give way, not just go sideways like this. Go down into your 1 minute chart. Well, now we're seeing this. We're back to our silver bullet entry now. See how the bodies broke above here? We're back into the premium range right here. The squabblers are set in the range. There's the 2. Seven, not doing anything this time, stuck in the middle. Squabblers, 9, 10, 11, 12. Then look for 16, 17, 18 to make your high here. If you close above this, then you're looking for higher prices. Your 5 minute people are getting excited because that's what you want to see. Changing the direction. Changing the flow. See how we have the swing point right there? Change. We're going higher. We're between here and here. These two candles now, premium and discount. I'm going to go for about another 15 minutes and then I'm going to go for a walk. I've been sitting here for 4 hours. So thank you, sir. Lows at 229 look likely now. I'm short. Yeah, I was short a long time ago, but if I end up getting this ends up breaking up here, I've got a really high stop up here. I definitely don't want to see this get taken out here. If that gets taken to the upside, then I'm going to close that out before I even get hit, because that means that we have a break in structure to the upside and we've got this premium BISI inside this big range here that's now been taken out. So I don't want to see that. If I see that, then it's definitely going for higher prices. This is one I don't want to see. So if I don't want to see this high get taken, this is like this. I don't want to see that one go above there. So if we see a body break above here, the wiggle room is right here. Is that imbalance that price can reach for, turn around and come back off of. But I'd rather see just this probe up into this range here for an optimum trade entry to continue going lower. Now you got the squabblers going on again. Who's going to set the low? The ICT stuff you were talking about. Thank you, sir. I can't find any link to the ICT on your YouTube profile. Thanks for doing the live stream. You're very welcome. Today is masterclass in price action. Just observe and learn. And Michael ICT was with us in the morning. Great Monday. Yeah, it was an awesome day, Fernando. It was we have ICT pop in. We got some awesome price action play here. We get to watch going up and down. Here's the squabblers doing their thing. Someone's trying to set a high here. These next 3-4 candles. High or low. And if Tristan, you're still in here, you see how that one set a high and a low. So you'd almost have a dot on each side of that saying, yeah, it set a high or a low. So the next one, which will be an 18 candle, we should see a reversal, and then a 19 reversal. They can go back and forth against each other in those few minutes. And one of them will set a high and then start heading down. Or up, as in this case. See, we've got a high and a low forming on that candle. So it's 18, take the 17 back to fill. And we're watching this up here. That imbalance. So 18, so is 19 going to run out the high and look for this imbalance back here, or is it going to start pushing higher? We don't want to see it close above here though, because then that's an indication that we're going to go higher inside that bigger range now. Take my $10 less and I'll move to the side. I'm gonna wait because I'm not sure what's going on here now. I like to see this, too much of this waffling stuff. I want to see this clean price action. And now when you start getting into this chop again, I don't like the fact that that looks like it's going higher. There you go. It's going higher now. So 16, 17, set the low. And you wanted 17 to set the high inside here and no more. And the fact that it came back up there again, I don't like seeing it run back up there. Once it's hit that, you want to be out of there. You want to snap off of that and start coming back down. The fact that it drove up there again, nope, get me out. Start running up higher and close. Now, if you're really savvy, you'll start watching the numbers over here on the seconds, and you'll use these dots by these numbers over here in reverse though, because they're counting down backwards, not forwards. So you have to know them in reverse, and you'll expect key levels to hit at certain times. In seconds, you'll see that candle bopping around back and forth here. At key times, you're expecting it to say, okay, I expect that thing on that 1 minute candle. I expect it to turn around right now and start coming back the other way. Again, that's just a matter of understanding your, see that rejection block does not give you the old high. That was enough to take me out. I went out of my live trade as well. Now you want to see it. For me, now just to get out of this crap, I want to see it close below this candle here. I want to see it go through here and here, drop below here, come back and use this as support to continue lower. Otherwise, I'm not playing. Let's just come back to the bottom of that fair value gap now to continue going higher. It's good to see someone who really knows what trading is and actually know how to trade ICT. That's a matter of opinion, but thank you very much. I appreciate you. Macon, how do you spell that? How do you say that? M-A, is the J pronounced like an H? Wow, Macon, Macon. I don't know, it sounds like a really cool name. It looks like a cool name. Now we buy or sell at this moment. We don't buy or sell anything in here, man. You stay out of this. This is like, unless you like cheese and you like to get grated up, you don't want to be in this. Wait for something clean to set up. So Imad, you don't want to be playing in here, man. Just because you're reading price action and you can see where the candle's going doesn't mean to say you should take a trade. Now we're bouncing off of this. I want to see it hold on this and push higher now. Now that's not a reason to take a trade, because if it trades all the way through this, like look at all this chop in here. You've hit the rejection block. You're in a premium portion of the range. And this has been manhandled and beat up really bad in here right now. So you just wait till you get something clean. Like this was clean. Dave was all over that because he saw it clean entry. That's what you want to see, something clean, not this choppy crap. We're just kind of staying off this inversion here now, and we're looking for higher prices. Look into the higher range now. So pull your fib from here to here and look at the larger range, and you say to yourself, what inside this range looks like an area that would draw liquidity, and what are key levels that draw liquidity? Fair value gaps, breakers, price imbalances, and you got one sitting right here. Also, this inversion up here that we were discussing earlier that we got in on. This is how you buffer trades. When you trade them once, catch your low, trade it twice, catch your low, trade it a third time, catch your low, and you're just treating it like it's the first time I've entered into the trade. So if this was stop loss was here, you got your entry right there for a short, and you aim for first set of loads, fair value gaps. You're cashing yourself out on the way down. It comes back up. You reload it on again, start your trade all over again. You've got money in your pocket this time. You start your trade all over again, aiming for rejection blocks, whatever inside here, 50%. You come back, clean those out, aim for a deeper discount array, pay yourself on the way down. And then when it comes back inside this range here again, if you see a break in structure, like right here, body breaks above it, you trade back to it perfectly. You get long there. You trade back up inside this range, 50, 62%, blah, 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 whatever you're going to do. Like they're sitting there. Sorry. Hello? Fuckers. Hate scammers, artists. So you're always looking at these inside the ranges that you're inside here. If you're going to trade inside a range, like if this was consolidation, you want to buy at a discount, sell at a premium. Don't keep aiming for 20 PD arrays above the range you're in. Yes, Michael can see those because he sees it on a different time frame. He's got a whole new different way of looking at it. I'm trying to get you to stay inside price action, inside a range, and look at how you would look inside that specific high to low. What sits in there that you want to find support at? So when we got above here with a body, you trade all the way back into it. That's your discount for a swing below this low. There's your swing trade. And then you're running back up inside this range. Well, what's above you? You want to aim from discount to premium, and you hit it right there. And if you keep running for that little imbalance we talked about as well, you've hit that, your rejection block, you hit that. It comes all the way back down inside this little range right here. That validates. You come all the way back down to or the bottom of that fair value gap. You find support at it. You didn't trade through it. And now we're back into this dude here. Equal highs. You got nice, clean equal highs here. You want to see that run right through that now. And look for that little guy right there. You see it? And then we just ran right into it. And once you see it in those ranges, and once you see that it's cleared that, now you say, what am I looking for? We said we were looking for this, and look at that. You smash it right there. Done. Not that you would have taken that trade, Imad, but that's what we're looking at to stay on the horse. Now you're up in the premium array. You look at that reaction you're getting off of that. Snappy little reaction, takes out all these highs here. You want to see the next candle close. And does this create the swing between this and this? That one candle and that down candle are overlapping, and they're down candles. I wouldn't even play inside that range. There's nothing in there. See how that's the high, that's the low, and turns that little swing point there and there. That down close candle was validated right there. You wait for an up close candle to get validated below it, and there's nothing. So you're stuck. You're waiting for this high to get taken and run back into this order block here. That's kind of like how I'm, and miss your carrot is, we turn the carrot sideways when we're not looking for an opportunity. Now, every time you take out a high, important, every time you take out a high, look for swing opportunities. Look for this reversal pattern to start happening. If you start to see a nice high cleaned out, and it's at a high that you're expecting, look at all these equal highs above you here now on the 1 hour chart. And there's a mean threshold, and there's also a low of that order block that has not yet been touched. So if you're pushing up here to run out these highs and take that order block and then reverse and come back down, why not? But again, that's wishful thinking. Where am I right now? I'm between here and here. So I'm not aiming for that yet. I guess technically you are, because you got a reversal here and it hasn't been disproven yet. You've got nothing to say we're going on the downside yet. So, yep, that's my objective I'm aiming for in the hourly. Is it going to come to fruition? Or Do we just get a reaction off of this and we blow through the bottom of that? Then I'm going to say, well, we have to put that on hold for a second and come back to 50% of this wick. That becomes more interesting on an hourly chart for me. And then I look for unfilled discount inside this big range that we're in here. We have unfilled discount arrays that haven't been devoured yet. You see that big range we're in there? So you look at the range you're in there, the range you're in here, this range, then that range, then this range gets smaller and smaller, compresses as it's going higher, extending this range, extending that range, but it comes back into this here, extends up, comes back into it again. Now we want to see it bust through here with a distinctive candle. Otherwise, if it gets support and keeps pushing higher, you want to see this one get taken out because that's the... Here, let's pull back into here again so you get an idea what this looks like. And then I got to go because as much as I enjoy doing this, I got to get some exercise too. Quarters. All right. Inside this small range from here to here, we're in the premium of the premium and now the discount of the premium. See how there's the 25? That's the 50% line. We went up into premium, premium, discount premium, 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 discount premium right here. Premium, premium, discount premium. We just keep running above and below, above and below. And it's making this slow, steady climb up. So you've got this trend line happening here. So what a great opportunity to blow a trend line phantom out of the water and slam right down into a discount array, which we haven't worked yet. And as we speak, it begins to happen. I don't know what the heck is going on here. Is that a 27 candle? Hello. That little dot should be up there, by the way, Tristan. Right? 27 candle. Now you got the 30, 32. There's 30, 31, 32 settling in the low. Here's your 32 candle. Come back, find support of this here. You don't want to see it go through there. Now you want to come back all the way to here. 2 dots passing in the night. And then come away. Strangers in the night. Equal lows. There's lots of liquidity. See how we took this trend line and smashed it, come back up, find some support inside this fair value gap here. You don't want to see it pop through again. Back to this order block. That guy doesn't count. He's inside this one. So yeah, I don't like to see that. Body. Get a reaction off of that. If not, mean threshold. Look at the body first. Snap off of that and keep coming down. So now you got this validated. So you got the mean threshold of this candle and this candle. So if we pop off of here, which is the bottom of that inversion, and then pop back up again, look for this here. So you between these two, that candle there and that candle there. Run back up. See how we're running through it now? Back to the rejection block. We either have to take this high out here, get on top of this one and take that high. Watch where it closes. Or this is just wicks do the damage, then come back down into this range again. We're in a consolidation, so you can argue both sides of it, right? I'm just watching to see if this candle's where we close on this candle relative to this candle here. As soon as we get above here, then you're bullish again, back into this range here. Back into premium, premium, discount premium, 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 discount premium, premium, premium. See how we're jumping over the top of this fair value gap, or sorry, this equilibrium of that higher premium range. We've closed above it, so now you're going higher. Bagging off of it here. It's just simply changing direction. We're not really breaking any market structure. You're just changing direction. You got to stay on the horse. It'll try to flip you off. So if you just go, oh, it's going down here. No, it's not. It's going higher. Stay on the horse. Watch these things. These are the things that are the telltale signs for me. It'd have to be broken below this guy for me to really commit to a lower price, because it's the discount one, premium one. The discount is broken to the downside, come back, find support. It's more likely to continue on the downside. You don't often see this get broken and then reverse all the way up here without taking out that low. So that little tiny one right there, you want to see this go all the way up through here. Now my eye goes here because you're breaking that high. Look for these. This is what you look for. As soon as you see a high get taken, look for the first fair value gap, BISI, on the side that supports the run above. And if it keeps running, then ignore that one. Go to the next one. Go to the next one. Go to the next one till you see it continue breaking another high, and another high. Take me out to the liquidity game. Take me out to the crowd. Limits get triggered. Stops get jacked. Mass liquidations. Now it was cause it's soup. Rejection. Reject and it's quite the musical truth. You have to set that to a rap, I think, there, Duke. Ahmad. Oh, teacher, I see the following candles before they appear on your screen. Duke, with no follow through, it's a shame because it's 1, 2, 3 blue accounts in the retail trading game. I like this. This could be a new rap song for you, Duke. In the 5-minute, Duke Crab. Craig, sorry, I went to the profile and more for ICT link, but it wasn't clear which one it was. ICT link. Which ICT link? Are you talking about the yeah, look up in the, go back in the word, the oh yeah, I'll just type it in here again. Are you looking for the ICT index? This is what you want. That's what you want, Greg. Oh, teachers do the phone yells before they appear. Sir, put signs on the screen indicating the direction of the deal because I am on Arab and I don't speak English well. Thank you in both cases. Yeah, there's no deal. You're not looking for trading a deal direction here. This is too consolidated. I can try and give you an idea. I don't want you to get a false impression about, I don't want you to think this is you're getting a signal service here. It's not a signal service. It's about reading price action. So up, pointing in this direction, up. You want to watch here, get above this and go up. So you're going to see, and this will change. by the way. You want to see us go up here, back to here, up here, and push higher. And if that doesn't work, that's what I want to see happen. If not, we're coming back into this range here. Watch this spot right here. And it's on a 40-42. Retrace back to here. Inside here. Actually like that. And if you're looking for trades, I'm not going to keep putting these up here so you guys can think about taking trades. I'm here to teach price action. I'll give you guys deals on how to make your trades. Just watch price action. That's what we're here for. This is just chop, can't play this. It's like it's either going up or down. And what we're seeing here. Yeah, it's choppy, but if you want to stay in price action right now, you're still bullish and you're still looking for this a run above this here to go even more bullish. If not, you're between here and here into more consolidation. But to stay on price right now, I'm between here and here, obviously. But I've got nothing that says I'm super bullish other than this break above this candle here and this candle here for a reversal. I've come back, found some support at it. Ideally, you would like this candle here now to provide a level of support all the way through. You got a body that traded above it, find support. You want to push higher now. And the only thing that changes my mind is if we start to trade below this to go short, then you have a change in direction again. Here's your 42. Come back to the order block. Or sorry, the fair value gap here again. So 45, you want to see start pushing. You want to see a distinctive candle really start to push up here now. If not, it's going to start to degrade even more through this candle. You don't want to lose the mean threshold of that, which happens to line up with that inversion. So you want to see this really start to grow a leg out of here and get through this candle on a close. It is a crabby market, that's right. With an axe, Duke. With an axe, chop up them crabs. Sung the tune of Take Me Out to the Ball Game. Yeah, I figured that's what it was. Vico. Yes, in a 3 drive pattern. On which time frame are you talking about? That's just terrible. See how that swing is right here? See this distinctive drop down? Take this low. Same with this one here. It's a drop down. Take the low. Body trades above it right here. You trade back to it right there. You have a perfect entry with 0 drawdown. Pull your fib tool and run that all the way back up from here. See this low get taken out here? Fair value gap. Body trades above it right there. You trade back into it right there. You get long. You're taking off at this rejection block, old high, and then back into that larger range. and you would have taken out right at rejection block there, and you come back into that smaller range, order block. You'd find support off the order block, run out the highs, and you get back into a little fair value gap over here and continuation. So here's a nice little reversal. Back up into the breaker up here. That would be my objective up there. 52.47. Look at this one here. Take this low out right here. Body breaks above it right here. Look at this. This happens all the time, you guys. Wait for and we're talking a clean break, like a nice clean distinctive breaks that high right there. You trade back into it. There's 1, 2, 3 entries. Where's the ideal one? Right here. And it's not there. It would be if this wicked all the way down and you see it wick into here, you see this big drive down, correlate it right over to there. That would be the ideal entry, because if we break that on the downside, then we're going shorter. But because we broke that on the upside, we're going higher. Inside that range, pay yourself at the next order block, imbalance, breaker, pay yourself there. This range here from here to here, is this 50% of the retracement? I bet you it is. From this range here. And then I really have to go. 50%. There you go. Just pops over it, grabs it, back into fair value gap again, wicks over it, continues higher. Beautiful. Beautiful price action. Anyway, you guys get the idea. See how we're stuck between these two right now? Bouncing off of them. And I think, I can't remember who it was who said, keep in mind, we got price news releases tomorrow and Wednesday. And I have on my charts tomorrow, today and tomorrow, setting a high or a low. I'd like to see tomorrow run these highs out on the hourly, or run that these highs out on the hourly and then run down. Or if we run for Michael's lows, those relative equal lows sitting down here on Friday, if we drive down and take those out, look for tomorrow to set the low. Tuesday is going to be the higher, the low of the week. That's where my guess is anyway. So we're sideways. Any questions before I head out? When I see big gaps, I keep thinking price will go back to them, like a 5-minute one near the higher, the low of the day. We didn't touch it. It's quite a premium though. Yeah, watch when you if you overshoot your PD arrays, you're going to find a lot of people do this. And I catch myself doing it way too many times. You want to start running, like Michael can say, oh, I'm expecting these equal highs to get taken, or the liquidity's resting above the market here. And he waits, and then eventually it makes its way all the way up there. I literally stay on the candles, and I'll tell you where it is inside there. I can never prove that it's going to come up there. He's so good at that. And on a higher time frame, if that was my objective and I was here, and I'd be saying, yep, that's my objective, until I get a reversal that says, no, that's not my objective right now. This is my objective. That's my objective. This is my objective. And I try to stay on the horse. And then eventually that gets taken and I go, oh yeah, well, it took me a whole bunch of times to get there, but I finally got it. He can weather all this stuff out because he sees so much clearer his higher time frame objectives. I'm just trying to show you guys how to read it, stay on it. See how we're dropping below it now? We didn't get the high we were looking for. And we're just banging around inside here. Dug into it. Wicking through it. There's nothing else down here. We got to actually close below this. Come back into it. Or just start extending this range now. Start taking this low, these rejection block and these old lows out. We've taken that high. right there. See these equal highs? They're taken. We just popped up above them. We've got more relative equal highs above you here, and that little fair value gap, well, it was filled. We looked for that earlier and finally filled it there. Didn't see that till now. It's filled. Now you're seeking liquidity on the sell side. Welcome to consolidation markets. This candle here, that candle there, they're overlapping. Fair value gap above you. So if we see a swing, take this out, look for this fair value gap to go on top of it to start running for the liquidity above the market there. Ideally displacement and INFG. What's INFG? Displacement. Oh, sorry, IFG, inversion fair value gap. Soup on the daily chart. Okay, well, that's it for me, folks. I'm out of here today. I will see you guys tomorrow, bright and early. And I'm impressed. We had a whole bunch of subscribers today. So welcome. And thank you so much, Michael, for popping in when you did. And I'd like to see the market actually smooth out a little bit better so we can show Michael what we're really made of and how to stay on price action. But I don't mind. I don't mind this rough stuff too. We can stay inside the market on the rough stuff. You just got to try and watch each one of these arrays and practice. This is what he means by getting in the charts, getting down and dirty right in these 1 minute charts and watching price action, studying price action. That's what we're trying to do here. So I hope you appreciate what we're doing here. If you do, hit the like button, and holy 64, that's been awesome. If you like it, hit the like button, and if you're new to the channel, welcome, and I will see you guys tomorrow for a Tuesday high or low of the week. We're looking for some action there, and we're going to try and catch that swing. We're looking for a key level on the higher time frame, and we're looking for this reversal to happen, and we're going to try and catch it and hold on to it for the rest of the day, looking for objectives. Tune in tomorrow. Let's see if we can catch that high or low of the day or of the week, and ride her out and catch a nice little sled run into the rest of the week. It's been fun. I've enjoyed my time with you guys. Thanks, Tristan, again for building the indicator. Appreciate it. It's awesome job, buddy. And yeah, I will see you guys tomorrow. Thanks again for tuning in. My name is Darren Hancock. Thanks for tuning into ThetaWaveTrader, and I'll see you guys tomorrow. Be kind to each other out there. Share this knowledge. Help other people out.